on recording on. Um, and what I'll do is I will mute everyone. So if anybody wants to just speak up, you guys can just unmute yourself. If I can figure out how to do that. Participants, nope. Host tools. Okay, how do I mute everyone?
You want to have 1 hour wait for it.
Okay, there we go. Okay, perfect. And recording is also started. And let's put view as, okay. Yeah, I think I got everybody. Oh, yeah, I think everybody's muted now. So we are good. All right. And just 1 second here. Okay, I think we are good, and I'll turn on the chat window. So in case somebody wants to say something, just say something here and we can take it from there. All right, so let's get started. Okay, so let me know if everybody can see the screen properly, right?
Yes, I can.
Awesome. Okay, so obviously, as you guys know, first most important part today's discussion is purely informational and speculative in nature. So no one on this call, myself or anybody else who is going to give their inputs is not a professional. They're not giving any kind of investment advice or anything like that. So if you do decide to make any decision, please talk to a licensed professional in your area before making any move. We want to get that legal disclosure out of the way so nobody thinks that we are trying to be somebody who's guiding someone. I'm a tax advisor, not an investment advisor. So no matter where you are in the country, if anybody needs tax help, I can definitely help with that, but not with investments. The purpose of call is only kind of take a look at what's happening in the markets. You guys are all smart people. Maybe somebody overlooked something or something that we should debate it among ourselves. That's the purpose of the call. So that way we have a little bit more comprehensive information as to what's happening in the market. I think 2025 going to be a very interesting year because a lot of things are going to change and there's going to be a lot of speculation as well. So let's take a look at last few years first of all. So pre 2008 financial crisis, job openings is a big thing. I think we talked about it on the group recently as well, right? Job openings is perhaps the biggest indicator of what is going to happen in market. If people start losing job, then obviously economy is in trouble. So we always got to pay attention to how we're doing with that. And obviously our government has been hiring people like crazy, and Trump has already made it very clear that he's going to run lean and mean government. That means he's going to probably reduce the government staffing. That means that's obviously going to further cut the jobs market, and that will have an impact on our economy as well. So, but we need to kind of compare it with what had happened in past. So on your screen, you can see that pre-2008 financial crisis, average job openings were about 3.5 million per month. And then post-recovery, that number went to about 5.6 million per month. And in pandemic recovery, obviously that was about 10 to 11 million job openings. And right now we're sitting at 9 million. So it's not bad, not good. So far it's kind of wait and watch. Let's see what happens next year, especially if Trump starts cutting the jobs. That would be interesting to see if that number comes down to 5 or 6 million. Then we will start to get a little bit worried here. So currently layoffs are not that bad either. Roughly about 1% layoffs are happening. Average is about 1.2. If we take a look at financial crisis, layoffs were about 2.2 to 2.5. That means these number of reports of layoffs literally needs to double before we need to start really getting worried. But so far it's holding off. If we take a look at pandemic, obviously pandemic, a lot of people were not working. There was a lot of support from the government as well. Um, and the layoffs were reached almost 11% in those days, but obviously we are nowhere close to that bad either. So we're still at 1%. Post-dot-com bubble, layoffs were about 1.5, 1.6. That's why I'm saying somewhere around 2%. That's when we really get super worried. But we are sitting at 1%. So we still have some way to go. So when a lot of people are saying, look, we are getting in trouble, yeah, we're getting there, but not there yet. It can sometime, by the way, it can happen rather quickly. You might see it like even in 3 to 6 months, or sometime it can take years. So nobody really knows. Major problems are starting to emerge in these four sectors, mostly healthcare. Healthcare has been major shortage. Technology is always a problem. That's why we see a lot of H1s here. And then manufacturing, and then obviously immigration problems that Trump has talked about will might create some shortage in construction industry as well. So those are the four areas where we're seeing a lot of job cuts right now. As far as Fed, so those of you guys who follow people like Warren Buffett, he has spoke many times that federal government, to the large extent, dictates how the market is going to be. Whether it's going to be up or down, they get to control it, and they mostly control it with the money supply and the interest rates. So as of right now, 89% probability of 25 basis point cut in December 18th. So we'll find out next meeting, but looks like that's where we are heading. One thing I do want to point out, some of you guys who are perhaps new in investment, sometimes people don't understand the word of probability. They think that 89% means that it's like, it's pretty much done deal. What they don't realize, there's 11% chance there that it might not happen. So feds can decide that, hey, let's just stay put, let's not do anything. It is possible, it's just highly likely they will do it. And then come January, they might put a pause on the interest rate cuts, and we'll talk more about those. How did they work out in the last 8 years as well, both in Trump 1.0 administration as well as in Biden administration. See how those policies impacted our economy. So inflation obviously is has come down quite a bit, but is still sitting at almost 2.8%. So Feds would like it to be under 2%. And there's a lot of chatter around that it might actually go up next year as well. So there's always a risk for that. So we'll see how that goes. So those are some important risks. December is an interesting month, 74% probability that December is going to be a positive month. So those of you guys who maybe believe in annuities or insurance products that are linked to some sort of index, it makes more sense to buy them in the month of December because you have a more probability of being positive at the end of the year than other months. Over the past 100 years, no other month exceeded, I think November is the only other month that hits around 70%. So November and December are typically the good months there. 2024, 56 all-time highs in the entire year. And I'm bringing that up because one of the common things I hear from people is, oh, market is all-time high. But they don't realize that all-time high keeps going all-time high. So we can see in 2024, if you would have stopped investing because market was all-time high, you would have missed out on almost 55 opportunities. So markets keep going up. Year to date, almost 30% return. And bigger problems is PE ratio is very, very high now, almost 30% above the historical average of 19.7. I think this number is as of December 1st. So this might be even in higher now, maybe around 30 P or something like that. So uh, starting to get into that trouble market space. And I'll talk about some of the other charts that you might have heard of, Warren Buffett putting the money aside, and a lot of smart people are putting some money aside. And then there are people talking about there's a lot of AI hype, there's a lot of Trump hype, crypto hype, interest rates going down hype. So there are people on one side of the fence who are saying that market's doing great because of all of those reasons, and then we have people like Trump who are taking a lot of money out of the market. So we'll try to take a look at the both sides of the angle here. But back-to-back returns for S&P 500, more than 25%, has only happened three times: 1935. 1954, 1997, obviously both after major disasters in the market. So um, more than that, had it happened, we got close to 22%, but nothing around that. So is it possible that we might hit 25% in 2025? Yes. And I'm saying that because oftentimes when I'm doing consultation, people say, well, we are all-time high, crypto is all-time high, real estate is all-time high. The uh, stock markets are all-time high. So they're like afraid of this all-time high, but they don't realize how often we actually run all-time high. In matter of fact, we run more all-time high than lows. So is it possible that we might still have another positive year for another 15-20%? Absolutely. Nobody knows. So Bitcoin obviously was interesting, hit 100,000 for the first time. Um, and Going in 2025, we know that Paul Atkins and David are a big time, crypto supporter. In matter of fact, I think just this week, state of Texas announced that they want to start taking payments in crypto. So whether that will get approved or not, we'll see because it still has to go through the committee and get some public opinion and all that. But Texas is already looking into start accepting crypto and start building a reserve around crypto. If that happens and then other states follow, I mean, obviously a lot of Republican states follow, and then if Trump is able to push and get Federal Reserve to start building a reserve for crypto as well, you can see that number starting to go crazy pretty fast. So only stock outperforming Bitcoin is Nvidia, obviously. So those two were the biggest kickers. Rental market. So rental market is starting to get stabilized quite a bit. Obviously, in last couple of years, we saw some turbulence. It didn't drop as bad as people were expecting it to be. But rents didn't fall a whole lot. Average rent price a little bit lower, but not a whole lot lower. The wages actually grew 4% year over year. So some people were complaining because inflation were higher in a couple of years, but overall 4% wage growth. I mean, that's not bad. And overall rental market is pretty good, and we will see that now with the Trump administration, people are expecting it to stabilize. So people who are on the fence, they were thinking about buying, you will see that they're going to make a lot of move in December and January. So that's what we're expecting. Obviously, Trump wants to bring the interest rates down, but a lot of people know that that is not in his hand. Jerome Powell kind of gets to decide where that's going to go. So we'll see how that happens. But obviously, we already know that they're, 89% chances that they're going to drop it by 25%, 25 points in December. But next year will be difficult. We'll see how that goes. So California obviously faces a big housing shortage even now, regardless of how many homes they build and all that kind of good stuff. So limited inventory is what's keeping the price high. So I think it's still one of the most stable market. People who are looking for big drops in California, I think they're going to be in surprise. And I think I did some numbers on it on different markets for different people in the recent last couple of months after the Wealth Summit. And what I found out was actually market is not that expensive in California if you think about it. So I think many of you guys are probably used to those housing prices around 500, 600K, but you're not realizing that people in Fremont, San Jose, Santa Clara are making twice as much salary as they were making 5, 6 years ago these days. And then add on stock market growth and RSUs and all that. So people are literally making way more money compared to what markets are doing. Multifamily homes obviously are still very popular both in Texas, California, everywhere. So those of you guys looking into investment, those are still pretty good. Out migration from California to states like, obviously Texas has slowed down quite a bit, not as bad as it used to be in COVID time, but people are still moving, so that is still there. But I think there are more people moving into California, a lot more immigrants when they come from other countries, they come in there. And the moment they come in, they're getting good salaries. So it's a little bit easier for them to buy homes than it was, 15, 20 years ago. So all those things are there. The main point is overall, market is starting to stabilize. So those of you guys looking into real estate, this might be a good time to start doing your research. But this is this is why a lot of people are panicking. So if you look at this chart for 10-year Treasury and then you compare it with 3-month Treasury, we can see every time this curve has inverted, we have turned into a recession. So we can see this happened back in 2001, it happened back in 2008, and now again we are at that inflection point. So we have just hit it right now. So a lot of people like Warren Buffett and other people, they're expecting that within the next 6 months that we are going to see a lot of turbulence in the area. So this is what's getting a lot of people panicking, and they're starting to save some cash. So we can see every time that curve has inverted, we have resulted in negatives. And obviously, 30-40% negative, especially some of you guys who are closer to your retirement, maybe you're 65 or 70 or something like that. You got to be careful. You really need to talk to somebody who is a good investment advisor and kind of guide you, uh, protecting some of that wealth, because this can, if market goes down by 40% and you're already retiring, that can have a major impact. So we are at that inflection point. So you have to be very, very careful. By the way, if anybody wants to speak up, just you can stop me anytime and just unmute yourself. Not a problem at all. Kind of hard to kind of pay attention to the chat while I'm talking. All right. So this is S&P 500 earnings. You can see S&P 500 up to December 5th is forward PE sitting at 22.4. And I think it's a lot higher now. And if we remove the the Mag 8, that is including Netflix now. So Netflix is back in that major hype category, I guess. Then the PE drops to 19.6. And if we take a look at just the mega cap PE, forward PE, that is still sitting at 30. Obviously, not as bad as it was back in 2020, but still quite high there. So that's another reason why people are panicking that these growth companies are definitely are problematic. They can bring the whole market down just because of these 8 companies, because other companies are not participating as big as they should be. So this is another standard deviation. Some people look at the 2.0 standard deviation. Some people like to say as the 1.25. So anytime this deviation goes over 1%, we call the market as overvalued. And when it hits 2%, we call it extremely overvalued. And as you can see, back on September, we hit that number. And right now we are in strongly overvalued category. So another reason why you're seeing a lot of people trying to take cash away from the market. This is 1.25% deviation. So you can see that anytime that hits over 1.25, we have run into major problems, recessions every single time. So I'm just giving you all of the reasons why people are panicking, why we are saying that we are close to a crash than ever before. All right. This is Buffett indicator. Buffett indicator actually compares. He doesn't really care so much about the PEs or anything other like that. He takes a look at the overall GDP of the country. And right now he's saying that, as of September 30, and like this number might be even higher now, is 208% ratio of market value to GDP. He takes the entire market value of our stock and compare it to GDP, and he's finding it to be 208%, 60% higher than long-term trends. So again, we are getting very, very close to seeing some downturn, some major downturn. I'm talking about 25-30%. So that's what's happening. Another thing you probably have heard is a lot of people have been talking about small caps, that they are going to do very well, mainly because Federal Reserve may lower the interest rates and small caps are been undervalued. They haven't really grown as much as we like it to be. Although I think 2024 we saw almost 20% growth in those. So um, that can happen. So we can see that in 2020, uh, the small caps delivered about 18% more than S&P 500. So in 29, after the 2008 crisis, the small caps returned 80% more than S&P 500. So people are counting on those rate cuts. But the point I want you to keep in mind is, what if rate cuts stop? What if Feds pause the rate cuts in 2025? Why? Because inflation is kicking back in. So what will happen? So nobody really knows. I know a lot of people in last few months when I was having consultations say, oh, we have a large portfolio in small caps. So keep in mind, although the theory makes sense, but you just don't know. It's not like inflation is not something that you can predict. If it happens, it's very hard to control. It takes time. So it is possible that we might not see huge gains in small caps again in 2025 if inflation comes back or Feds decide to increase the interest rate. But if they do decide to decrease the interest rate quite a bit, and that's the hard part. Will Trump be able to influence the Feds to cut the interest rate? We'll see how that goes. So just be aware of the fact that it can be a risky bet as well. Another one I'm hearing quite a bit is about gold. So people are saying, look, things are looking bad, things are looking difficult. I'm seeing all these people moving the funds out. What if we move into gold? So you have to be very careful with gold as well. The if we have low interest rates, typically we see high gold price. Why? Because people, investors mainly, they don't want to make that low interest rate. They would rather make higher return in gold. Higher interest rates, obviously lower gold price because people would rather make their money in money market funds or CDs and annuities and all that. And we're talking about people who don't want to take a lot of risk. Another reason is weaker dollar typically means higher gold, and stronger dollar means equal to lower gold. So you might have heard this conversation happening online quite a bit that Trump is going to get rid of a lot of debt and he's going to make the dollar stronger and all that kind of good stuff. The counter argument I'll give to you that if we have so much debt, we means the US government have so much debt at this point that we really do need to depreciate the dollar. If we don't depreciate the dollar, it becomes very difficult to pay for that debt. So more than likely, I have a feeling that whether Trump's like it or not, he will continue to depreciate the dollar as much as he can, and he will try to bring the interest rates low as well because he doesn't want to pay that much interest. So this will be interesting how it plays out. So can gold, still go higher in 2025? Possibility is there, but it can also, go down by 10 or 20%. So it's not like I guess the point I'm trying to make is a lot of people think that it's a sure bet. I don't think it's as sure as people think. It still have that probability of going either way. Uh, the real question is what will happen with the interest rate, what will happen with the money supply. So it could be either way. So let's take a look at some major numbers from 2015 to 2020. And I want to point out, so I'm using these four because a lot of people are invested in people see Amazon as a stable growth company. So I'm using that as an example here. Then I'm showing you the gold chart here. Then I'm showing you the VUG, which is Vanguard Growth Fund here. And then I took S&P 500. So kind of get a good idea of different things here. And these are different drawdowns that have happened. So you can kind of see how that works out. So when drawdowns happen, gold is usually a good bet. Yeah, so you can see it does have that hedge, uh, but it comes with that other risk because when there is a growth, yeah, you might be able to save yourself 3-4%, but growth can be 20-30%. So take a look at those numbers, see if you know it gives you any kind of this is another one that I hear every now and then. Well, when market is a lot high, I will move from growth to S&P 500. So if you take a look at that, is almost the drawdowns are about the same whether you move the money here or there, either way. But typically in the last several years growth has outperformed the S&P 500, so there's a more probability of making money here than here. And then on top of that, obviously, um, we have this AI rush. We don't even know how that is going to materialize. We are seeing people, companies like Microsoft are starting to take advantage of it. ChatGPT, OpenAI, obviously, is another big one. Um, NVIDIA is obviously on the forefront of that. But there are many other companies that are working on AI-related technologies, and we are going to see how those numbers are going to look like. And many of those are, by the way, small cap, which are not even participating yet. Okay. Um, okay. So U.S. natural debt. Yeah. Sorry. Go ahead. Oh, looks like somebody maybe joined. Let me see if I can mute everyone here again. Okay. All right. Yeah, and anybody wants to jump in the call, please feel free to unmute yourself and talk. All right. So we obviously know the U.S. national debt has surpassed $36 trillion, and that it doesn't seem to be going down. I don't know. Obviously, there's a lot of promise from Elon Musk to deal with that problem, but we'll see if he's able to make a big dent in it at all or not. I mean, $1 trillion is a lot of money. I mean, a lot of money. And right now, I think we're paying more than $1 trillion every few months just in interest rate alone. So I think we will save more if we are able to just bring the interest rate down. We just need to figure out how to deal with inflation. So growth stocks, like, obviously you probably heard of these stocks are the ones that are here all the time, like Hims, Mama, Palantir, and there's some other stocks that YouTubers talk about quite a bit. If we start to go down, these are the kind of companies that are going to get hit pretty hard. So just be careful with that. So 2025. So interesting thing. So now I gave you all the reasons why market can be super bad in 2025, but here are some positive news. So we have a government right now, or we will have the government in 2025, which is pro equities, which is pro business. They are going to create a huge supportive environment for business. So, even though the history tells us something else, is it possible that we might actually do something completely opposite and deliver another 20-30% gain in 2025? It is possible because the governments have a lot of power. They can change policies, and they can create momentum in the market. So it is definitely possible. But the second half of the market, that's where the people are saying that we will see issues like tariffs and deportation impacts happening, or more conversations happening around that time. So I think first 6 months people will be all excited. Last 6 months we'll see how that goes. So I think there's still definitely money to be made, but the real question is, are we going to hit brakes sometime in 2025, or we are going to be able to push it to 2026? Trump impact is going to be huge in 2025 because new president, new policies, people are going to be super excited. They will be very optimistic. They're going to be looking at the growth. They'll be looking at the future. They'll be looking at the business friendly environment. And obviously taxes is going to be the big part. He has already said that, Tax Cuts Act, he's going to make permanent, and we'll see what else will happen. So we have another 2025, end of 2025 to wait and watch, see what happens there. This one was an important one. I thought I should share that with you guys as well, so we can kind of compare how the markets did under Biden as well as under Trump. So most importantly, if we take a look at 2017, QE had ended, balance sheet started to unwind, and federal rates started to go up. And when that happened, market actually delivered positive returns. So you can see almost 22. And I'm bringing that up because a lot of people say that as soon as the rate hike starts, market crashes. That did not happen in Trump administration. Actually, it was positive. When we went from 1.5 to 2.5, you can see the quantitative tightening has accelerated. And that is what a lot of people are expecting to happen in 2025 and 2026. So did we get hit? Absolutely. There were negative returns. We can see growth was almost nothing. S&P 500 was down, and small caps were twice as down. So this is another problem that we can run into. And then 2029, Fed paused the balance sheet mid-year, and that what brought the growth again. We can see we had a rate cuts again, 2.5 to 1.75. So if rate cuts happen like that, we can see another 20-30% growth. So this is what everybody is counting on right now in 2025. And then obviously emergency rate cuts happen again due to COVID, and markets love those rate cuts, and we delivered 40%. So we are under Trump administration. So a lot of people are hoping something like this can happen, and maybe we make that bubble a little bit more bigger bubble for another year or two before it bursts and we see another 30-40% crash. So this is an interesting one, right? So if you think that market may follow the same trajectory as Trump 1.0, and he's able to deliver at least 2 good years, I mean, you're talking about almost 100% gain, because you get a 40% gain here and another 40% gain. That's almost 100%. So if you take the money out of market, that can be a big loss. So you kind of have to think about that. If we take a look at the Biden administration, obviously, even in 2024, I think growth funds are up 40%, and S&P is up 30%. And 23, it was up almost 20% and 30%. So even here, even Biden administration did very well as well. So keep that in mind before you start moving your money around. So we'll have a discussion on all these topics, but just want to make out, what am I doing? So what do I believe in? Do I get out of the market? Do I take all my money out and kind of, just wait and watch, see what happens? Absolutely not. So those of you guys who know me, I'm mostly invested in ETFs. That's what I believe in. Last couple of years, most of my returns came from either total market index funds or Vanguard growth funds. So those two. So I love those, and I still believe that there are a lot of great companies in the US that are working on interesting technology. So I think growth in this country I can believe in. I think for many, many years, we have the best business environment and we always adapt and make changes and so forth. So if you talk about long term, I think we'll be just fine. In the meanwhile, I do need to adjust my risk. That means I will take some of my positions and move into cash and wait for opportunities if market does strike. Not a huge, maybe maximum 10 to 20%. That's what I would do to my overall portfolio. Nobody knows really where the market will go next. So if you hear a YouTuber or somebody, or whatever social media platform you follow, and they talk one way or the other that market will go up or down, they don't really know. They're just speculating, just like anybody else. The best strategy always is to just, DCA, dollar cost average into the market, and you'll be just fine. So let's open it up for discussion. So anybody wants to jump in, please jump in and let's have a open conversation about the markets.
Hey Deepak ji, just wanted to. I have a question.
Yes, sir.
Thanks very much for balancing it out with gold. I like the concept where you spoke about hedging against the market's downfall. So would you be able to talk a bit more about um, techniques that we can use in stock market to kind of use techniques that we can use as hedging, sort of, right? Like I'm talking about stop loss, or how if I'm going with a stop loss, what should, are there any observations that you made on how big that what is the margin should be to add that stop loss to, or
Yeah.
would that help to hedge
Yeah.
against the fall?
So the thing is, again, I'm not a trader. I don't do a lot of in and out of market. I'm a long-term investor. So I look at it from that point of view. So maybe when you're asking about margins and all that, that's really more for somebody who is trading quite a bit. But I can definitely share how I manage my risk. So number one thing is I accept that markets will go down. So I know markets will go down by 5%, 20%, 30%, and perhaps even 50%. I accept that. So if market goes down by 50% tomorrow, my portfolio cut in half, it won't bother me at all. So if it bothers somebody, then perhaps they should talk to somebody and readjust their portfolio to something that it won't really get hit. For example, maybe you want to consider S&P 500 and a bond mix or something like that. Or maybe you get into annuities that guarantees you that you would not lose money. So there are a lot of other strategies like that. But personally speaking, just the fact that you accept that there will be downturns, you're good because that means it's not going to bother you. That's step number one. Step number two is you need to look at how much cash flow are you generating and how big your portfolio is. So I'll give an example. Let's say if you say, you know what, I want to have 20% money set aside to take advantage of opportunities. Now, if you're able to generate 200K in cash and you have $1 million portfolio, maybe you don't need to do anything because you have $200,000 cash and now you can use that money to take advantage of the market opportunities. But if you're not generating cash, maybe you don't have rental income or some discretionary income coming from some other business or something like that, and all you have is just your stock portfolio, then maybe you say, you know what, I'm going to take a look at some of these growth ETFs or growth stocks, whatever you're invested in that has gone really, really high, and maybe I'll take 10 or 20% uh, profit booking on those, and I'll save that money to take advantage of the markets. So you do that. And then the question is, okay, do I wait with that money or do I start buying now? So the answer to that one would be is you just simply take a look at what is it that you want to buy. You take a look at the historical averages of that particular ETF or that particular stock, and based on that you wait until it hits that sweet spot where you're not really waiting for it to hit the bottom, but it's like you're in a comfort zone. So for example, let's take a look at Amazon. I think Amazon is a great company for many years. It's highly diversified in so many different businesses, and it has a great growth prospect. So if Amazon comes down by, let's say, 20%, do I wait that, hey, maybe Amazon can drop 50%? Probably not. The moment it will drop 20%, I'll start doing my dollar cost averaging. If it goes down 30%, I'll do more. If it goes down 40%, I'll do more. So I think the most important point is, A, you have the cash to take advantage of the opportunity. And number two, you have identified what is it that you want to buy to begin with. Because if you know what you want to buy, you can plan. Let's say you want to buy into growth, you want to buy into S&P 500, you want to buy into small cap, or even if you want to buy individual stocks. The problem happens is most people don't know. So what happens is when market goes down, they're just waiting for the best opportunity. Should I compare Nvidia versus Apple? And you can do that if you are that good, if you're able to pay attention to a lot of different things. Most of us are not. I mean, there's so many stocks out there. How many companies can you really focus on? But maybe if you can identify 4 or 5 opportunities that you want to take advantage of when market drops, they're on your radar, you believe they're good companies, they're going to do well over the long term, then you just kind of watch out for those. Whenever they are dropping by 5%, 10%, 20%, 30%, each time they drop, you start to do dollar cost averaging. So that's what I do. Like I said, most of my portfolio. So I'll talk about a little bit about how my portfolios are. So I do 3 types of investing. Number one is mostly ETF. These are my long-term retirement planning kind of things. Most of those are either in total market index or growth funds. Um, so whether the large cap goes up, small cap goes up, mid cap goes up, I don't care, because in total market index, I get advantage of that. But at the same time, I want to take advantage of the growth, and that's where my other half is in the growth fund. So that's one. I don't touch it either way. I don't care. For next 20, 30 years, I'm good. Another bucket is where I look for individual opportunities. These are the companies that I believe will grow 20 to 30% per year. So these are good companies, stable companies. Will they have drawdowns? Absolutely. They're awesome. They're beautiful. Not a whole lot, maybe 5 or 10 companies at the most, but as long as they can grow 20, 30%. So very small chunk, less than 10%. So overall, my portfolio, I take 10% of that, and those are in those companies that I know, that I believe. I think even if I'm up, 50% of them are do well, I'll be okay. And then on top of that, what I do is I take 10% of that 10%. So let's stick with $1 million portfolio is the overall portfolio, the main retirement. 100,000 will be in 20 to 30% growth companies. And then I take 10% of that, that means $10,000, and I invest into speculative stocks. These are the companies I don't know if they're going to do well. Right now, they're looking like they're hot shots. They have huge technology. For example, Palantir. Palantir has made a lot of noise in last 1 year. The governments are heavily, using their services. They're everywhere. Every day I look at them, I hear in news that, they partner up with this, they partner up with that. This is what they're doing, stuff like that. So I don't know if Palantir will do good or not, but if I put just $1,000 into it, and if it is able to 100x in next 20, 30 years, I'm good. I'm happy with that. So if I'm able to spend, let's say, $5,000 or $10,000 in highly speculative companies, and I would not touch them. I'm not looking out their finances. I'm not waiting for, do I look for finance? Yes, but those other 100,000 companies. These speculative companies, I'm not even looking at them. Either they're going to do very well or they're going to go to zero and I'm going to forget about them. All I'm doing is spending $1,000 and forget about it. So anyhow, that's the way I hedge. That's the way I manage my money.
Thanks for explaining that.
Anybody else? Want to jump in, have your shares, what you believe about the market, please jump in.
Deepak ji,
Yeah,
quick question.
Yes, sir.
Hey, it's Neeraj. Hey, just wanted to understand your take on investing in gold bars, like physical gold versus the equivalents in digital format, like gold bonds, or there's now even crypto that represents gold. do you think there's any difference between the two strategies?
देखो यार, if we talk about like a digital asset versus a physical asset, right? The answer is, what do you believe? If you, the reason why you're thinking about physical asset is because you don't believe in system. You don't believe in the banking system. You don't believe in the equity markets. You don't, basically you have lost faith in these systems and you want to hold something physical, something that you control. So if that's the kind of mindset you have, then it does make sense to hold those physical assets in your hand. But then again, how are you going to insure them? How are you going to protect them? So there is a risk either way, I guess. It just depends. Personally speaking, I'm not a big fan of gold unless we are in a super low interest rate environments. So that's when I like gold. But obviously, I don't think we're going back to that anytime soon.
Thanks.
Yeah. Deepak ji, one question here. A long-term hold, if we believe, then I'm just thinking about that. Let's say when we die, at that time, let's say the amount we give to our children is less than the allowed limit. I believe the cost to them would be at the time of the death, right? So in that scenario, will the long-term hold not a good strategy? Because if we keep on selling, buying and selling, then we need to pay a lot of taxes, right?
May or may not, depends upon how you structure it. So for example, if you're into like ETFs or something that you can hold for long term, or like for example, my portfolio, most of it is very long term portfolio. So in that case, it's all good. I just need to kind of figure out what my tax strategies will look like. Meaning, maybe I incorporate insurance as part of it. Maybe I incorporate some advanced tax strategies to mitigate those tax bill. I certainly don't want my tax bill to pass on to my kids, so I'll think about those. Maybe I'll think about conversion as much as possible. So in that case, yes, but that's just me. A lot of people don't look at things that way. Like for example, maybe you work for Nvidia and you have a lot of Nvidia stocks. So do you hold them forever or do you diversify? A lot of people actually have to sell on a I mean, that's what a lot of people come to me for, because they have sold. People have sold. For example, you probably heard a lot of people believe that crypto is going to hit 250, 300K in 2025. But I have plenty of clients who sold their crypto in 2024, and they are going to sell even more in 2025, and they're willing to book profit and move on. So to answer your question, it really all depends what kind of risk tolerance you have and how does your portfolio look like. Sometimes it does make sense to take on the profit and just pay the taxes. Sometimes it doesn't. So this one is a very unique, and you got to kind of take a look at your overall situation and then kind of see, okay, which one makes sense. What kind of companies do you have? What do you believe in? And how does your other income sources look like? Do you have some rental income or not? So much has to play into it. This is a $1 million question.
No, this is only for SPY. Just put the money in SPY. That's it. And then
Yeah, so if you believe in SPY, that's not a bad idea. Just leave it and forget it. That's what Warren Buffett suggested strategy as well. Don't have to touch it. Just leave it alone and you'll be good. You do have to worry because SPY roughly going to double 7 to 8 years. And if it doubles 7 to 8 years, depending upon what your age, you have to figure out how big that portfolio will look like, by the time you pass away. How much of that money you're going to use? How much money will that go to kids? How much of it is in Roth, and how much of it is pre-tax? And how do we mitigate the taxes as much as possible? Maybe we want to, because see, um, whether the money grows under your name or your kid's name, taxes are going to be problem one way or the other. So it makes sense to kind of look at that picture and figure out how to mitigate them. And trust me, there are always ways to mitigate them. So people who ignore it, who make a transaction, who sells the stuff without thinking about taxes, they get hurt quite a bit. So let me just put it this way. Whenever you're thinking about doing a transaction, talk to somebody about taxes and figure out how you're going to reduce those, because that can have a big effect. But I agree with you 100% that if you are doing a lot of transactions, then taxes will hurt you more than versus if you wait and then do the transaction.
So just one comment on this, since this is related to inheritance, I thought there is some step-up basis when we pass along our profits to the next generation. Is there something like step-up basis where the next generation won't be taxed, basically?
Well, it depends. A lot of people, for example, come to me, they have money in their 401k and they don't even realize, some of you guys may be in your 40s and maybe you have $1 million sitting in 401k right now. That that 401k might be $5-6 million by the time you retire. And maybe you have your money in your stocks, maybe you have your money in other ways, from retired 401k or not 401k, sorry, from pension and other ways that you are able to live off and you're thinking about passing on that 401k to your kids. Now they're going to get hit with a lot of taxes. So, it makes sense to do a little bit of tax planning around that.
Sure. Deepak, one question I had on one of your slides.
Mhm.
It was the first graph that you showed, which had some interest rate related stuff. I'm trying to understand that graph. Can you talk about a little bit about that graph?
Let me think. Is my screen share still on or no?
No, you are not sharing.
Okay, so let me go back here. Let me just
Yeah.
make sure we
I
are
think it's
on the
the
right.
first graph on your slide. Be ready for turbulence.
Okay. Yeah, not interest rate related. So I think you're talking about this one right here, right? Yeah. So this
No,
is
you are not sharing the right slides. You're not sharing the right screen.
not this one?
We are sharing your browser. We are seeing your browser.
Oh, okay. Got you. Right. So let's go back. Okay. So maybe this one. This one right here, right?
Yeah, this one. I'm trying to
Yeah.
understand this graph. Can you talk a little bit about
Yeah.
that?
So basically, it's showing the 10-year treasury minus the 3-month treasury. Basically what they're saying is that 3-month treasury right now is making more money than the 10-year treasury. And whenever that happens, looks like we always run into a recession.
Oh.
It's mostly accurate, but sometime it can take years. For example, back in 99, it took almost 3-4 years of growth before it actually kick in. So that's why I'm saying that 2025 could be one of those years that it might not happen, but we are certainly getting it closer. But again, this is not the only one, right? So this is just a one indicator, but then there are
Yeah.
many other indicators. So they all are pointing to the same one. The biggest one is what Warren Buffett is talking about, which is that our GDP is just not growing as fast as the valuation of our market is. So, so there is certainly a risk one way or the other. The only question, I think the only question is the Trump impact. Because, and I was talking about this yesterday with someone, Trump is a very egocentric individual. He wants to do things that nobody has ever done before. For example, mass deportation, you know, uh, removing birthright citizenships. He wants to do things that he can be known for forever. So, is it possible that in 2025, he is able to push regulations, he's able to push the markets to even all-time high because he wants to be known for president who is able to just deliver earnings. It is possible. He is that kind of guy. It's like now you got Elon Musk and Trump running the government. Uh, it will be interesting. It is possible that all the prior rules are broken. Look at stock market returns for 2024. Normally, when interest rates are hiked, markets don't give returns. Markets are in negative. Again and again, we have seen that historically. But 2024, that happened. You know, um, when interest rates are higher, the gold prices are typically lower. But look at the gold prices last year. I think gold delivered 30% return in 2024. So I mean, we're doing things opposite to what have ever happened before. Uh, the problem I think I see with a lot of people like us is that we are not Warren Buffett. We don't have as much of cash flow coming in from different sources. So some of us, if we give up on growth for next, if let's say if Trump is able to deliver double-digit growth for 2 or 3 years, some of us who are in our 60s, that can have a big impact on our retirement. So can we really walk away and just move everything into safe assets? Probably not a good move. I think we need to be a little bit cautious, take a little bit off the table. So, depending upon whichever way the market goes, we're able to take advantage of it. Anybody else? Any comments? Would anybody agree, disagree? Any companies you guys want to talk about? Raj bhai, any comments? Anything you want to talk about? I think you're on your mute, Raj bhai. You can unmute yourself.
Yeah, what do you think about NVIDIA for next 1 year?
Yeah. So obviously, NVIDIA is a great story. So the biggest, actually, the problems with Mag 7, not just with NVIDIA, with all the Mag, or you can even call them Mag 8 now because Netflix is part of it. That's what a lot of people are going into it, is that they are consistently generating earnings, at least so far, right? Uh, so because they're consistently generating earnings, there's a very good chance they're going to go continue to go up. But the problem I see is that a lot of people who invest in stock market don't invest because company is generating earnings. They invest because other people are investing.
Yeah.
Right. And they move things because other people are moving things. They're always like constantly moving. So again and again, when I go into meetings and talking to people, I hear constantly that oh, markets are all-time high. So, markets in a short term are mood and momentum. So when you say, next year about NVIDIA, that's the problem part where the mood and I think better example would be Tesla. What has changed with Tesla that took it from 140 to 400?
It's incredible, yeah.
Fundamentally, nothing has changed with the company except that Trump won the election.
Yeah.
So like if you believe so much in Tesla, why were you not investing in it 3 months ago? And now I was in a meeting yesterday. Oh, I just bought Tesla. I bought Tesla. Everybody's like buying Tesla all of a sudden. Like, why were you not buying it 3 months ago? What has changed? Nothing
Yeah.
has changed, right? So that's the interesting part, what will happen. But overall, I'm still bullish on all the Mag 8 companies because they're generating earnings. And especially since your question is related to NVIDIA, thing about NVIDIA is that they have invested a lot of money in a lot of different AI companies that are not even producing revenue yet. So it will be interesting to see how all that stuff look like. Um, it's not like I have put all my money in NVIDIA, but it is one of those stocks that I do believe will constantly going to grow, not 100% anymore. But if it constantly grows 20, 30%, I'm happy with that over long term. So that's the way I look at it.
And we talk about Palantir, and I think that might be not bad investment if I want to put in for my grandkids. Just put $5,000 and forget about it for next 15 years. What do you think? Means I can afford to lose it, so I think it might not be bad gamble.
Okay, so good point, Raji. The only question is why just one? Like, why put all the bet in one? Right? Like when you say that I'm putting everything is in one, that means you know something that I don't know. So
No, it's just no, it's I have a good size portfolio, but just $5,000 that I can afford to lose, no problem at all.
No,
So,
I'm with you. I'm with you. What I'm saying is, it's a good idea to diversify, right? That means look for maybe another 3 or 4 Palantirs.
okay.
Hopefully, couple of them will pan out.
Right.
Right now everything is looking good. Palantir is, I looked at some of their stuff they're able to do is so fast that technology is able to make sense out of data that other people can't. So they definitely have a competitive edge. Do I believe it's a strong company? Absolutely. But your question is, hey, do I put 5,000 about, forget about it. If you want to forget about it, and if you're only putting $5,000, I'll probably pick maybe 4 or 5 companies instead of just one company. And hopefully, if we have 50% hit rate, then we'll be fine. But you just never know. And this is another good one too. So a lot of time people say, oh man, I missed out on NVIDIA. I missed out on Tesla. I missed out on Palantir. No, you didn't. You just missed out a window. There's always a window. It wasn't too long ago when Meta was trading at $99. Take a look at Google valuation today. It's still not super crazy. On the other hand, Microsoft and other companies are still bad. Amazon, still not that crazy. All I'm saying is if you never be in that fear of missing out kind of an opportunity. Okay, so that's one point. Uh, there always going to be opportunity. There will be another Palantir in next 6 months. There always is.
Yeah.
Every year there is something going on. So that's point number one. Point number two is instead of putting all 5,000 up once, I will probably dollar cost average. I'll try to spread it out over maybe a 1 year or 2 year time frame and see how it goes. So even if you say, Deepak, I just don't know. Look, if Palantir is a good company, then whether you buy it this year, you buy it next year, or you buy it 5 years from now, it's still going to be a good company.
Yeah.
And if it's not a good company, it's not going to be good either way, you
Yeah.
know. So that's the way I would play that game. I would not really go put all the money at front at up. And the second thing, Raji, is if you do want to even do that, then I would not just put the money under your grandkid's name. I'll probably structure it a little bit differently. But that's a private conversation we can have
Right.
separately. But I would not. I will certainly not just put under his name. That might not be that good of a strategy.
Oh, okay, great.
All
Thank
right.
you.
Deepak, I have a question on finance section. Like as Trump is coming in now,
Okay.
what do you think? Like how is it going to impact the financial institution, like all the bank sector and everything?
Yeah, so we talk about that, right? So big speculation is that Trump is pro-business. That means he's going to make it easier for businesses to borrow. He's going to reduce the regulations. He has already promised to do that. Remember that drill baby drill thing? He wants to get rid of a lot of regulations. He wants to make it easy for people to construct. So he wants to reduce the home prices by making it easier for construction companies to build. And he has talked about bringing the interest rate down, although, like I said, I don't know how he's going to do that because that's out of his control. Um, so those are all the things. But interest rate is perhaps the biggest factor in this whole puzzle. And all the things that Trump has talked about, they are going to increase inflation. And if they increase the inflation, then how do you bring the interest rate down? So this is going to be an interesting one. See how that plays out. So the two opposite sides of the things. But overall, a mood and momentum of people right now is pro-Trump. People believe that if anybody can do it, that would be Trump. But I haven't seen any practicality of how all of those will work out. I see that everything he has talked about, except the deportation part, is mostly negotiation. He's saying, look, let's bring everybody back on the table and let's get to do some deals. I think that's the idea. Everything else is just scare tactic. So would I make any decision based on that information today? Probably not. I don't know. I know some of you guys on our group are probably that way, who are able to predict the future and able to make the bets that way. Like I said, 90% of my portfolio stays in large ETFs. For example, total market index. I don't care if financials goes up or Nvidia goes up or Tesla goes up. I'm still participating in that growth. So I don't care. And the other 10% is in companies that I believe will do well over the long term. So even if I'm not right, if they take a drop for 20, 30% in next 6 months because of Trump policy, then I buy more. It's still in my favor. And like I said, the 10% of that is in speculative stocks, which I don't know either way. If somebody tells you a story why Palantir is a great, they may be or they may not be. I don't know. When people say they know something, I'm telling you guys, one thing I have learned so far, nobody knows enough. Nobody. Because if Palantir knew how big it can be, wouldn't the CEO of Palantir would just buy the entire company? He probably, put his house on mortgage and he said, like, I know this is going to be a great company. I'm just going to buy everything. Who is stopping him from doing that? The truth is they don't know. Nvidia doesn't know. Microsoft, nobody knows. So there were some people. Is Ravi Bhai on the chat today? No, I don't think he is. Right. But I know he's big in Tesla, and he talked quite a bit about it and why he believed Tesla is going to do very well. So there are people like that who bet big on one thing. I have some clients who are huge on crypto this year. They're going to hit $4 or $5 million just in crypto alone. MicroStrategy, another big one. Those of you guys who are not familiar with that company, another great one. So anyhow, that's my take on Trump. And generally speaking, by the way, when I talk, if you have attended my discussion call in past, I'm not one way or the other, right? Because my job is not to sell you something. I'm not trying to get views on YouTube or try to sell you some investment product or anything like that. The truth is, there's always the risk looming around. The question is how much risk you're willing to take, and the answer going to be different for each person on the call.
Got it. Thank you. Regarding the ETFs, so would you mind sharing like a list of good ETFs and different sectors? As you mentioned, you are like most of your portfolio is in the ETF side.
So personally speaking, like I said, right now, as of today, I'm only invested in 3 ETFs. The VUG, which is the growth index fund for Vanguard, and Russell 2000. So any Russell 2000 is small cap one, because I do believe that there is a chance that Russell 2000 will do well. Honestly speaking, so so this is how I had constructed. That was my theory earlier, but now I'm more convinced that it doesn't make sense to do all kind of diversification. I think total market index makes the most sense. You stick with it, makes it easier. If you believe in growth stories, you can go with VUG. So going forward, I'm going to stick with VUG and total market index. I think it's simple. I don't have time to play around with that stuff. Whether the small cap goes up, large cap goes up, this goes up, that goes up, total market index just work fine. You can compare it with other indexes. It's not bad. Simple one-time thing, and you forget about it. And then here's another thing. A lot of people talk to me and they say, you know what? We want to beat S&P 500. And they're buying all kind of crazy stuff. Well, if you want to beat S&P 500, why not just partner up with the best investor we have ever seen, Warren Buffett? Just get into Berkshire Hathaway stock. They have consistently beaten S&P 500 for so many years. If that's all you want, that's a good opportunity there. If that's what you're looking for, why go into all kind of different options? I think the only reason you want to go to different options is if you believe in the growth story, because that's where most of the returns are coming from. So VUG is the one that I use.
Thank you very much.
Yeah.
Deepak ji, what do you expect to happen to the banking sector now, given the bank stocks?
Yeah, so we talked about that earlier, right? So
sorry.
Yeah, so the theory is this. The theory is that Trump wants to reduce interest rates. That's number one. However, that I don't know how he can do that. He has no control over interest rates. He cannot say anything. He cannot pressure the Fed. That's completely out of his control. He wants a seat to be able to participate in that conversation, but he currently doesn't have, and I don't think he will have. It's just political pressure there, but that's about it. Interest rates will come down when inflation is under control. And inflation has been coming under control. Feds want it to be under 2%. I wouldn't be surprised if Trump administration and Feds reach a midway and say, you know what? Going forward, let's just expect inflation to be 3%. I mean, who came up with a 2% number, right? It was somebody decided 2%. What's wrong with 3%? So maybe the number will say, you know what? Let's just expect 3%. Why? Because we're paying so much interest payments for the US national debt. It's crazy. Why not we stick with 3% inflation? Let's make that an acceptable number and let's reduce the interest rates. I think that's what we might hear, because it is looking very difficult to hit that 2% number. If that theories pan out, interest rates comes down, what happens? All of a sudden, everybody wants to buy more homes. The businesses start to acquire other companies. People want to start manufacturing. Trump wants people to set up factories in the US. Economy starts to kick in, and the small businesses and the banks start to do very well, because that's how the banks make money. So they're happy. So is financial sectors going to do well if interest rate comes down? Yes, absolutely. But again, if that theory doesn't pan out, if um, inflation comes back up in 2025, which it might, especially with all the things that Trump wants to do. And Fed wants to say, look, no, this is not good. We're going to stick with that 2% rate. Then there's no reason for them to cut the interest rate. If there is an inflation, why are they going to cut the interest rate? So if that happens, then banks probably not going to do well. So it just depends. And that's why I keep saying for people, I mean, every year there are these decisions to be made. And there's always a probability of things going one side or the other side. And because of that, I like the total index funds because who cares? If small caps do well, I'll be okay. If large caps do well, I'll be okay either way. So that's my theory on it. And that's what I think a lot of people in the financial market, that's what they're believing, that financials will do well under Trump. They have done well under Trump previously as well because he's pro-business. So yeah. So but again, inflation is still a big risk. Don't undermine it. It hasn't gone away. It can still come back.
Thank you. I also have just one other general question about investing, right? Like I think in the short term, for example, you talked about Palantir. In the short term, there is some predictable growth in these stocks. Of course, long term, nobody can say. It depends. Like you said, nobody really knows what's happening. So why not invest for the short term and take short term profits, pay the tax on it, and at least you have some predictability for the short term, right? Like if you don't know where to go long term because of Trump's policies, which are going to be new.
So a lot of people do that. I mean,
Okay.
I just don't do that, but a lot of people do that. Many of my
Okay.
clients do that. There are a lot of people who make a lot of money in that. Uh, and I'm sure that a lot of people in our group do that. So there's nothing wrong per se. The answer to your question is how much time do you have? I'm a tax guy. I need to focus on taxes. There's so much to study about taxes. Every single year we have to go through like this big of regulations that has changed. I just don't have enough time to keep track of all those things. The way I do my discussion calls is every day when I see something interesting happening in a market, I just make a note of it, and then I just share it with people. So I'm doing. It's not my research. It's all the notes that I've collected over the last couple of months, and I'm just sharing those notes with you. Uh, but can I take advantage of all this information? I can if I act on it every single day. I just don't have time to do that. So you gave an example of Palantir, but I can talk about it many other examples. Let's take an example of semiconductors. They were doing very well, and let's imagine you invested in them, and then all of a sudden they haven't been doing very well. So you might have lost some money in those. I mean, Nvidia went from 140 to what, $90 recently. So if you are into short term and you haven't really thought about your thesis over the long term, what will happen is every time market will go down, you will panic and you will sell and you will lose a lot of money. Same thing with Tesla. Maybe you heard a lot of story and you bought into Tesla. And what if Trump doesn't win? A lot of people were actually not counting on him winning. What if Biden would have won? Do you think Tesla would be sitting at 400? Again, you would have lost out. Palantir. Right now, there's a lot of hype around Palantir. But if you take a look at, we didn't really do any calculations today on numbers, but if we take a look at the numbers, I'm sure the numbers not going to make any sense to us. And when you're talking about these short-term companies, majority of the time, numbers would not make sense. Majority of time, these growth companies, PE is going to be super high. Numbers don't make sense. All your counting on is in future growth. And nobody really knows what that future growth looks like. There's just some ideas some people are making. I mean, look at Tesla, for example. I don't know, all kind of numbers. Some guy says, well, Tesla going to hit $1,000 in 2025. Sure, you can come up with whatever. You can come up with a number for 2,000, 5,000. Nobody's stopping you. But I don't know how they come up with those numbers. So that's the problem with short term. If you're good with paying attention to the market and you're able to make those judgment calls in and out really, really fast, then that's okay. But otherwise, I think most people lose money in short term, then they make money. So be careful with it, unless you have time and resources to spend on it. And you can talk to other people in the group and see what their take is. Some people are really good. I mean, I would meet at least few clients a year who make well over $1 million in short-term gains. So some people are good, but majority of the people, when they make those short-term decisions, they're losing money. Not that good.
Makes sense. Thank you so much.
Deepak, this is Karin here.
Yes, sir.
Quick question. What's your point of view on REITs as an asset class? Maybe with a flavor of if the interest rates are going to come down, that'd be a good area. Maybe in a Roth, if that's an option.
Yeah. So the biggest problem you have with the REITs is how are they leveraged? And are you able to control that leverage or not? Because what happens is when you're buying a stock, most of the information is public. So you're able to at least are able to make some judgment call. But when you're buying a REIT, you don't always have the complete information. So all you're doing is relying on their past performances. If you're okay with that, that's fine. But my question to you would be is, if you are interested in REIT, why not compare that to a regular real estate investment where you have full control? I mean, why do you think REIT is going to do better than your own personal real estate? I guess one reason would be you're just investing a very small amount. So just curious, what's your take on that? Why would you prefer REIT compared to a personal real estate?
Yeah, it could be I mean, you want to invest in any property here, it's going to be $1 million plus. And then that itself is going to be a huge part for a portfolio. And that also is concentration, right? So REIT will help you diversify. And yeah, I mean, that's mainly instead of putting $1 million in one house, you can probably put, $10,000 into 100 different options.
100 different properties. Yeah. I mean, I see and there might be some good ones right now because if interest rates comes down, there might be a lot of opportunities out there. Not a lot of REITs are good. They don't, I think if you do the calculation of owning a property over a long term, I think it usually turns out to be a better deal than sticking with the REIT. You lose, it's just not, I mean, a lot of things can go wrong with REITs. A lot of things, especially, for example, we saw what happened in commercial market. If it's your own personal property, you have way more control. So yeah, I guess if you have already taken advantage of all of other opportunities and you just want to add it on as an asset class, that's not bad. But the real question is, let's say if I'm interested in a particular REIT, I would spend at least year or 2 years getting to know that company better before I spend a single penny on it. I will probably, join their conferences call. I will talk to their investors. I'll go visit how those properties are managed. I'll talk to their investor relations. I will request a lot of documentation. Like I'm more afraid of REITs than stocks. Let's just put it that way. So before you put your money in it, just do your due diligence like you're buying any other property. And I'm saying that because many times when I see clients investing in REITs, syndicates, or partnerships with people they don't know, oftentimes they are losing money. And the reason why they lose money is because they just didn't do their due diligence. Somebody told them a story, they liked it, they were happy, and they spent money in it. They didn't even spend like 1 month studying anything. So something like these big projects, how much debt they are taking, at what interest rate they're taking, how are they managing property. There's just so much for you to know. You got to get like nitty gritty into that business. So be careful. I mean, if you do due diligence, not a bad idea. But I just feel more comfortable in regular equities than REITs, honestly speaking, or personal real estate. Real estate is my favorite. It can turn anybody into a great investor because you hold and you wait for 20, 30 years and usually it works out.
Right. That's helpful. Thanks, Deepak.
Deepak ji, this is Chandra. So thanks for all this great data that you are collecting over the period of time and sharing with us, and that too free of cost.
No problem.
That's really big heart. I had a question regarding, I think in our investment discussions, there was one, somebody shared the link about micro ventures and investment in the SpaceX. What do you think those kind of the investment, especially about the SpaceX?
Yeah, so like I said, that's a pure speculation, right? We don't know. So obviously they are building good technology, something unprecedented, something that can have a major ramifications on our economy, on the way we live. So, but is that going to be profitable? Is it ever going to make money? Nobody knows. So if I take, let's just say if that is a great investment, that means it's going to return 1,000 times on it. So if I want to put $1,000 into it, why not? I mean, that would be more than enough. Like I don't need to go put in millions of dollars. I mean, you can if you truly believe in the company, but because I don't have enough information, I'll take a very small chunk and I don't mind playing that card because it can have a major impact. I don't know how much, but I think micro ventures probably require some minimum, no?
50K.
50K, right? So they require
Yeah.
so right now, like if personally speaking, I would not do that. Like I'm not convinced to put 50K into that company, you know. So,
But
but
currently, it appears that the U.S. government and NASA, everybody's looks like they are 100% dependent on them. There is no competition.
well, question, are they, because I haven't really looked at their financials. Have you looked, are they profitable? Are they making money?
No, not yet. I mean, we often talk about SpaceX, and there is another company called the Rocket Lab, and both of them have very successful launches. But since this thoughts always remain primary, so we never did further deep dive into. But if there are other people who are also interested, maybe I can also join with them for investigation.
Um, are you thinking about maybe like combining 40-50 together and build like a partnership and then that partnership invest into SpaceX? Is that what you're thinking?
Not, but if that idea comes up, I can join there too. I
Yeah.
mean, at this moment, I was not thinking that way, but that's a
Yeah.
good idea too.
Yeah. The key one thing to keep in mind is that 50,000 is what percentage of your overall portfolio. So, like I said, for anything that is highly speculative, I like to keep my percentages super low because I know there's a high probability it will go to zero and a very low probability it will make me money. So for me, 50,000 will be too much to spend in such a high speculative stock right now. But for some of you guys who have that kind of discretionary income, that would make sense. But yeah, we can talk about it to other people, some people who wants to speculate and maybe we can come up with some sort of idea around that some people get together, build a partnership, and together you guys can do those kind of bets if you want, but like highly speculative unless we have some financial. And that's the problem with all growth companies, by the way, all the new growth companies. You just can't rely on financials. Some of them will survive, some of them will not survive.
So those the middle man services like micro ventures, they don't share any data generally.
I have not done it with them, but because these companies are not public to begin with, they're not required to share all the data.
Oh yeah,
So whether they do it or not, that's volunteer. Like if they want to, they can, but they don't have to,
yeah,
right?
I agree with you. Thanks, Deepak
So,
ji.
all right. Anybody else, guys?
So on the same note, Deepak ji, if they want to attract more investors to put their money into their venture, shouldn't they be making it public, the information, whatever they have?
Well, see, they can't. That's the beauty of the US regulations. This industry is highly regulated and they don't really know themselves. Let me put it this way, guys. Let's say if Elon Musk needs to get a loan for $100 billion from a bank, do you think it's really that hard? Do you think he can get a loan? Or
Yeah, he
200
can.
billion or 500 billion or whatever number you want to put it? I mean,
Yeah.
right? I think he can easily get a loan, right? Why do
Hmm.
you think he wants to raise capital?
I don't know. Maybe taxation is in
No,
the
the
picture here.
answer is always very simple, guys. Even he's not sure.
Risk.
Risk.
Risk, very
Hmm.
simple. No matter what anybody tells you. Um, Yesterday, I was having some conversation about, with somebody. They were talking about Biden, Trump, economy, this and that. And I'm like, look, one thing you guys can all agree on, everybody who come to this country, whether you're Republican, Democrat, or whatever else you believe in, one thing for sure, we all are here to make money. If anybody tells you otherwise, they're lying to you. Everybody's there to make money, no matter what you believe in. The only thing is, what's going to make you more money will depend upon what you're doing. And that's why you're a Democrat or Republican or whatever else you might believe in. So similarly, when a business owner goes and starts a business, if he was 100% sure it's going to be profitable, there's no reason for him to take money from anybody else. The only reason he's taking money because he's not sure. And
Correct.
other people are participating because they want to participate in that risk. So the problem I see is sometimes I will see clients and they say, well, I'm participating in this opportunity. I like to inverse that. I like to say, don't say that I'm participating in opportunity. Say it, I'm participating in that risk. The moment you rephrase that thinking, you will start asking different set of questions. And when you start asking different sets of questions, you will start to arrive at a little bit more comprehensive conclusion than just looking at things from one point of view. And that's happening everywhere. So, um, whether it's SpaceX or Palantir or whatever else that you might believe in.
Got it. Thank you. Deepak sir, what is your thoughts on qualified opportunity zone funds to reduce, to
Yeah,
defer tax?
right. So they were very popular for a few years ago, but obviously, as you guys know, that the benefit will expire in 2025. So whether Trump is going to extend it or not, we will see. I have a feeling he might now that he's back in office. He definitely wants to help out real estate. So I will say, number one, it's not as attractive as of today as it was a few years ago. That's point number one. Number two, it depends how you execute that strategy. Some people execute it by investing in some sort of fund, which is certainly one way to do that. Another way to do that is you can always buy a real estate in that area. So you just need to figure out what that area is, and you can buy a property yourself and hold it yourself. So you have full control over it. That means less risk of things going wrong. So that's another thing to keep in mind. And third thing I will say is most people execute it because they want to save on capital gain taxes. And whether we go for a qualified opportunity zone or not will depend upon how big those capital gain taxes are. So if those numbers are huge, and when I say huge, let's say over $1 million, then there are other strategies we look at. But for smaller strategies, obviously that is always one of them. Oil and gas is another one of them, and there are a few other things that you can look into it. So the point is that's not the only option that you have. So there are other options as well out there.
Does anybody have a perspective on Trump's, once he made a statement, right, that he'll remove SALT again? I'm sorry, he'll reinstate SALT deductions.
Yeah. So SALT was, so those of you guys don't know, she's talking about the local taxes, state and local taxes. That's what she's referring to here. They basically hit all the Democratic states. And so a lot of people call them a tax on Democrats, basically, that by putting that limitation, all these areas were not able to take advantage of all those additional deductions. Trump official position is he wants to increase the cap to 20K. That's what he wants to do. So whether that would happen in 25, probably not. Maybe it will happen in 26, more than likely. But that's his official stand on it. Go from 10K to 20K. But he's not like making it unlimited or anything like that. So
okay, too bad.
yeah.
Yeah, he's only hurting most of the Bay Area property owners
Exactly.
and owners.
Yeah. Yeah. I mean that's just how it
Bay
is.
Area and New York. Apparently, like those are the two quarters that are hit the most, like with this removal
Correct.
of SALT deduction.
We have the highest state income tax rate and high property value, home value. So yeah, hurting both ways.
Yeah, but I think California does a pretty good job of hurting its own people. I don't think they need somebody from outside to do that for them.
Yeah, that's true too. Yeah.
How did Newsom go from $200+ billion surplus to 200 deficit? I don't know.
Yeah. I mean, I think wasn't there a news that they were putting aside, I don't know, like $50 million to fight Trump? So that's where the money is going. So we'll see. California is its own beast. But see, look, overall, we can have a discussion about California uh, in a separate call. But overall, there's a reason why people are rich in California. I mean, you don't see this kind of wealth being generated anywhere else. In California, maybe some of you guys are brand new to Bay Area. You can make a lot of money in California relatively quickly. So yeah, those tax problems are there, real estate problems are there. But if you play your cards right, you can get rich in that area in like 5 to 10 years. It is absolutely possible. So uh, you just have to look around and look for those opportunities. Not possible in other areas.
Then why did you move?
Yeah, so why did I move? I shared my story a few times with you guys, but what happened was I didn't want it to move here. I came here for only one weekend, and the idea was that I'm going to invest in something. But when I came here, I was told that everything was already super expensive. The properties I was looking for was well over $1 million. Only came here for one weekend, and we were flying back on Sunday. Our flight was like in 4 hours. And my wife said, you know what, let's just talk to a builder here next door. Maybe they can tell us something. And we go there, and the builder slammed that door on us. And she says, sorry, we are fully sold out, and I'm leaving for the day. And we said, well, I understand, but do you have anything coming up in next year or 2 or 3 years, any new project that might be about 500K? And the lady says, not 500K, but maybe something around 550 if you're open. And everything around the area was $1 million. So when she says 550, we're like, oh yeah, I mean, if everything around is $1 million and you have something coming up for 550, I'm interested. She says, I don't have all the details yet. I don't know how the project going to look like, but I know we have something coming up. If you're interested, write me a $5,000 check, and I'll let you know when there are more details. We're supposed to have a flight to catch. We said, you know what, screw it. I'll just give it a $5,000 check and wait, see what happens. We wrote her a check that day and left, came back to California, and a couple months later, COVID hit, and all the schools were shut off, and everything was just gone. And 3 months turned into 6 months. About 6 months later, I got a phone call from the builder. They say, hey, we are starting on your property. We're going to have your house ready in 3 months. Um, 3 months later, they called me again. They said, yeah, house is ready. You want to come see? We came here. We saw the house. Beautiful. We liked it. My daughter goes to Challenger. So we said, okay, you know what? Let's just go check out the Challenger here. And we go there. And I asked them, what are your plans for opening the schools? And she looked at me like I'm some alien. She's like, what are you talking about? I'm like, when can kids come back to school in Texas? She says, we never shut down. Schools are open. You can send your kid to school tomorrow. And my daughter says, Dad, then why are we going back? You don't want me to go to school? So, and we thought, you're like, you know what? The schools are open. Nothing is happening in California anywhere. Might as well stay here, at least until things open up. And that 6 months turned into a year it turned into another year. 2, 3 years passed by, and now she's all set in the school and like, okay, everything is all good. Why move back? So it was totally unintentional. Nothing that was planned out.
Did your real estate give you the kind of returns? I mean, no, you're not sold, of course, you're living there, but still, have the house prices increased substantially, or are they
Yeah.
flat? Or
So like I said, the prices here were already $1 million, and they are still well over $1 million here. So that
nice.
was
So you've doubled your money?
well, obviously I haven't sold, so in
Yeah,
one way,
I know,
no.
I know. On paper.
But yes.
Awesome.
Yeah, that financially it worked out okay.
So you're in proper Austin or in the suburb of Austin?
I'm in Austin, like
Oh, wow.
actual. So there's a suburb called Cedar Park. It's like at the border of Austin. So where my house is, the red light, one side is Austin, other side is Cedar Park.
Oh, okay.
Yeah. So pretty good, but and again, even in Austin, there are plenty of opportunities. I'm not saying, in matter of fact, you go around, you see a lot of construction going on. All the uh, commercial properties are actually being built by Indians right now. So everywhere I go, it's somebody Indian building commercial. flex spaces, restaurants, gas stations, apartment buildings, commercial real estate, all Indians, big sporting complexes. So a lot of syndicate and stuff like that happening here as well.
Because Samsung is building big facility, right?
Big,
Close, yeah.
absolutely. In matter of fact, I don't know if that we have. I don't think he's on the call. Actually, one of the big guys at that Samsung factory um, is somebody part of our group.
Oh, wow.
The Samsung factory that you're talking about. So he runs a big team there. So he's very optimistic about that area.
Hey Deepak, a few minutes back you mentioned like if somebody plays their cards well in California, they can be rich in a few years. So when you say the cards, are you talking about mostly towards the real estate or any other areas also?
Yeah, all of them, right? So okay, first of all, when I say cards, we have different ways to get rich. Obviously, being in the right job is one way to get rich. And Bay Area has a lot of those right jobs. I mean, there are people whose W-2 income is well over $1 million these days. So, I mean, sometime I'll meet with a client who joined NVIDIA like maybe like a week before the NVIDIA stock hit all-time high. So stuff like that is happening all the time. There's another NVIDIA being built right now somewhere in Bay Area. You just don't know who they are. So that's one way, finding the right job. Another is starting a side hustle, starting a business. Those of you guys who came to the Wealth Summit, the audio video, the guy who put the two screens together and managed the speakers for one day, that cost is $5,000. Imagine how many of those events are happening throughout in the Bay Area. So there's a lot of money to be made there. Decoration. We did a Wealth Summit, for example, at ICC a couple of years ago, and we hired a lady just to put the decoration, which was nothing just but some simple stuff behind the stage. She wanted to charge $5,000. There are people organizing birthday parties, people doing all kind of side hustle, food trucks. I have a client recently, not an Indian client, she's a Mexican client. She runs a food truck. And when she came in, I was shocked. They had nothing in their 401k. And she's in her 50s now. And I was like, how can you talk to so many tax people in your life, probably? Nobody ever forced you to do a 401k? She says, no. I'm like, so what do you do with all the money from your food truck? She owns 7 properties in Texas, all 100% paid off. Her rental income alone is over $30,000 a month, just out of food truck. Can barely speak English. What other country provides opportunities like this? Right? So doing some sort of side hustle is even more important, in my opinion, than investments or anything else like, because they produce cash flow. Third, you rightly mentioned real estate. You can, I know real estates are all-time high and all that kind of good stuff, and it doesn't make any sense and whatnot. But over the next 10 years, 20 years, where would real estate be? The same house that you're looking at for 1.5 million might be 3 million by now, and you'll be saying the same thing. So, I mean, when I came to Fremont, the homes were $350,000. If somebody gives me a house for $350,000, that'd be awesome today. And some people might think, well, 350, that must be like 100 years ago. No, that was like maybe 20 years ago. It was not that long ago. So markets do grow. Look in Berkeley, look in San Francisco. There are plenty of opportunities out there. Los Angeles market. So real estate is indeed another good one over the long term for you to build significant wealth. I have plenty of clients who are now retired and they own 5, 6 properties, more than enough to pay for their retirement, right? Then speculation, like I said earlier, everybody. So a lot of people will say, don't speculate, right? But what's wrong with speculating with a very tiny amount of money? Like all of us can speculate with maybe $100, maybe $500. Like what's the big deal, right? But if you just speculate with $500 and if that bet pans out, that can be a huge deal. There is another crypto sitting around. There is another Nvidia sitting around. You just have to be careful and watch out as to what's happening. Like Raj Bhai already talked about Palantir, for example, a big name right now that is making. If it works out, it's going to be huge. It can be another next Nvidia. So speculation bets have huge upside potential. So that's another way. And third is old-fashioned way, slow and steady investments. Uh, is Amazon going up? Look at the Mag 7. Mag 7s produce almost 80% return in 1 year in 2024. Over the 10 years, are Mag 7 going to go bad? Probably not. I mean, Mag 7s are such a huge companies, such a huge impact on our economy. Somebody sitting on $100,000, they can turn into 200, 200 into 400, million into 2 million. I mean, these big companies have huge potential. Where else in the world you have so many opportunities to take advantage of? You got equity markets, you got small businesses, you got crypto, you got real estate, you got high paying W-2 jobs. That's why I'm saying there's just so many opportunities. People are just not looking enough to take advantage of them.
Thank you.
Anybody else, guys?
Deepak ji, one question. All this United Healthcare, Humana, with RFK Jr. coming in, do you see them as good bets for future growth? Because they have a stable cash flow, but you never know how regulations are going to play in that.
See, once again, speculation, right? I mean, the problem with speculation is if I have 100x possibility, then I'm willing to speculate. But if let's just say they do good. So what? Maybe 15% growth, 20% growth? I mean, are you expecting them to be 100% growth?
No, maybe 20 to 30%,
Correct, right? So
yeah.
my question to you is, for 20% growth, do I really need to speculate? I mean, wouldn't I be able to make 20% growth in just any growth ETF? Wouldn't I be able to make 20% growth in a good diversified portfolio with real estate and S&P 500 or something else like that? I mean, my question to you is, for 20%, is it worth speculating?
Yeah, I know. I get the point. So, but the question is, like healthcare it's like a $1 trillion industry, and looks like we are completely broken there.
Yeah.
Right. So I was just curious, like, is that a investment? Is that an investment?
Like I said, we don't. It has a lot of unknown variables. That's the problem.
Yeah.
So that's why I call it a pure speculation at this point. I don't know. Nobody really knows. Nobody really knows how it's going to work out. And obviously, we all kind of feel it that medical markets are broken. In matter of fact, I will actually give you another prospect. Are you a U.S. citizen, by the way, or one of you on EAD or anything like that?
We are on green cards.
Okay, green card. Then perfect, right?
Yeah.
I mean, look at any business in medical field. I think you'll have so many opportunities. People are not looking into medical field. You can get licensed by state in California. You can make money by helping older people find homes. You can make money by helping them find jobs. You can make money by providing care for them. You can make money by, feeding them, by bringing meals to them, by driving them to hospitals. You know, we are just not even looking at. I think there's more money to be made on the business side of things than all this other speculation. So if you guys are on green card and you don't have a good side hustle going and you like the medical, and I say that because I'm assuming you've been studying medical. And if you're studying medical, then look for opportunities in medical. I think once you dig deeper into it, you'll be impressed how many opportunities are there.
Yeah, no, I agree. I think if so, I would love to understand how to get this. Some ideas. So if someone from the group would love to also jointly collaborate, would love that. My name is Shri, by the way. So
Okay.
We can do that. But thanks, Deepak.
I will.
What I was curious.
Yeah, I will put out a poll or something, and then at least if few people are interested, then we can have another call and we can talk about a lot of different opportunities that are available in medical. I might be able to even invite a couple of my clients, and maybe they can come on and they can talk about some opportunities.
Absolutely. Like food is medicine is such a huge one that is going to go up. It's about a $3 billion industry, which government is going to completely subsidize. So I'd love to know
Yeah.
the regulations, but looking at the right trigger point to jump into that.
Yeah. Once again, like I said, you're asking the wrong guy. I do speculate, but I speculate very little. Mostly I stay just neutral and I take advantage of all opportunities. I'm okay with 20-30%. I'm very happy with that.
Me too. Me too.
recently
I'm also happy with 20.
I recently got some perspective on, since many years people are talking about aging population and their medical needs and healthcare needs. And I know I got some visibility into how old people, like a couple of people I know, they had to sell their home to buy into these long-term care facilities
That's right.
because you have to invest a certain amount of money in the property, and then your health care and daily needs and cleaning and driving you to hospital, medical appointments, etc., are taken care of. And I'm looking at that, and not everybody can even buy into that.
Yep.
Right. And there is a shortage here in the Bay Area of properties that are available like that. So I'm sure there is a need, an unfulfilled market for taking care of that. So if somebody's interested in that as a side hustle, I am confident there is a lot of opportunity.
Oh, absolutely. I have few clients who audit this. You can even buy a single family home and convert into such a home. So
Okay.
definitely
You suggested that to me. I remember.
Yeah. So there are definitely I am working with a client right now. She's a doctor and she moved back home to take care of her parents, and now she's trying to do something like that to take manage it from overseas and run that business here. So plenty of opportunities in that area, absolutely. And like I said, maybe taking care of is a lot more work, but there are a lot of other things where you don't have to take care of people. Like just helping them find people jobs, you can make money. Helping them go to hospital, you can make money. Bringing them medicine, you can make money. Helping them move into a facility, you can make money. So there's a lot of money to be made in this field. All right, guys. Anything else? Any other business or anything else we want to talk about?
Deepak, one more question. What's your point of view on international diversification? If you have a sizable amount of your assets in, let's say, India, in let's say your parents' name in equity, and also you're now in US.
Right.
So does it make sense to continue both? Because India is also on a growth trajectory. Now, obviously, the rupee gets devalued. That's a factor to account for. But does it make sense just to diversify both countries?
I mean, I think that's over diversification, in my opinion, personally speaking. I mean, first of all, US have so many opportunities and so many ways to diversify. Do we really need one more way to do that? So that's number one. And number two, India has its own sets of problems. I mean, obviously, US has its own sets of problems, but India has even bigger problems that it still needs to tackle. Population is a major issue. Resources is a major issue. All those, and then current, like India has no option but to devalue currency. That's how they continue on they want uh, inflation to be 5-6%. That's their stated policy. They want it to be there. So personally speaking, I would probably bring most of my money in US if I had a lot of assets and try to do stuff here. I think if you play your cards right, or even if you don't really play your cards right, as long as you are not expecting some crazy returns, I think you can do just fine. My biggest problem is, let's say if I have assets in India, whatnot, I really don't have time to manage it. I can barely spend time here to manage multiple things. I like to keep things simple. So if somebody has time and they're able to monitor on both sides of things, that's okay. Another problem we are running into, or at least that's what most clients tell, is they depend on family members to manage those things in India, and that is destroying people relationship. You know,
That's true. And also, the rupee and dollar is continuously widening the gap. I mean, in 2012, like last week, I was looking into the graph, and in 2012, it was like 56 or 6,
yeah, for
around that, and now it's 84. So, what your money you make there is getting offsetted by the gap.
and then the tax policy, right? They recently changed the tax policies and they can change it again if they want to. I mean, the way I look at the Modi government, for example, is on one side, they want people to pour in a lot of money in India. And on the other side, they make it super hard to take the money out. So that's a little bit tricky there. So they're trying to take advantage of from both sides of the equation. So if I had an option, honestly, if you ask me personally, I would rather manage my affairs in US, even if I make a little bit less return because I don't want to deal with the headache. So if you have a lot of time and effort to manage the affairs there, then that's okay. But there's so many opportunities here. I mean, look around, depending upon which area you are in, right? Look at which businesses are growing. So if you see a great restaurant that is doing very well, maybe talk to an owner and see, can you partner up in the next opportunity? Take a look at another grocery store that is opening in your area, or or a gas station, or whatever. Look around all the businesses in your area. If you see a consistently good business, you can make more money in that than anything else. And real estate, guys, real estate is still such a big opportunity. I mean, especially in Bay Area, you can't build. There's no land left there, and there is no other place like California. So if you have money, I'm surprised that you're not acquiring as much as the real estate as you can, um, because there's just not enough of it out there.
Thanks, Deepak.
Okay, let me see if it.
I met some people. They started with like a small fourplex apartment complex in real estate, and they did really, really good, because like you said, there's no land available. So if you have existing real estate, it's going to go up. And with the housing market, the houses are so expensive. A lot of people will be prefer to stay in the apartment because of this. There's a lot of demand for the apartments in Bay Area, particularly,
Everywhere.
Yeah,
See,
every Bay Area. Yeah.
Raji, you can, like, for example, if you like give me any area. Let me just pull up some numbers here for you guys real quick. Give me any area that you are interested in for real estate, for example.
No, it means right now I think the price might be better in Santa Clara, city of Santa Clara, compared to Palo Alto or Menlo Park, because Santa Clara still has some good value, I think.
Okay, so let's just see, for example, let's say Santa Clara, for example. That's the one you said. Okay, so let me pull up some numbers here real quick for you, if internet works for me. Do you know Santa Clara zip code by any chance?
You can put 95051 or yeah.
Okay, looks like they have 95050. Okay, so I'm gonna put up Santa Clara, for example. 2005, so about 20 years ago, Santa Clara median income was $57,000. Right now, it's 132,000 in 20 years.
Wow, that's almost 2.5 times. Yeah.
Okay, and if I take a look at, let's see, 2011, 35% of the homes in Santa Clara were actually owned by homeowners. And prices, obviously, in Santa Clara has gone up quite a bit. As of right now, that number is 42%. More people own homes than ever before in Santa Clara. And if I take a look at poverty in the area, it went so actually it's about the same. Looks like back in 2011 it was about 11%. It's still sitting at 11%. So still pretty good. But most importantly, let's take a look at a rental rate in the area. So in 2005, the average rental rate in Santa Clara was $1,400.
Mm-hmm.
And today it's sitting at $3,000. Meaning in 20 years, it literally doubled.
Mm-hmm.
So let's just say even if you buy something right now for 3,000, in 20 years, that will be almost $6,000. I mean,
Yep.
for most of us, that will be more than the Social Security,
Yeah.
you know. So, um, so real estate still makes sense. It's because of the income growth, people are not realizing. You know, if we let me actually bring up the home prices real quick. Let's see. Kind of
Much
gives
different, probably, yeah, 20 years.
yeah, because this kind of gives me an idea. If I take same area, so 2005, the home prices were roughly around $600,000.
Mm-hmm.
That was the price. And today they are roughly $1.5 million.
Yeah.
But in the meantime, income has tripled
Mm-hmm.
and the rental rate has doubled. Right? So imagine what will happen in the next 20 years.
Mm-hmm.
You know, people will be making way more money, rental rate would have doubled. So that's why I say I think real estate overall still have plenty of opportunities there. Anyhow, if anybody else wants me to take a look at any other real estate market, I don't mind doing that since we don't have any more questions here.
How about San Diego, California market for this
Okay,
renting?
let's
Maybe
see.
you can say for 92131 zip code
Let me see.
around that.
So San Diego 92101. Okay, so it looks like right all the coast.
92131.
Yeah,
92131.
921. Okay, 92131. Okay.
Yeah.
Okay, so a little bit more inland, not the coastal area. All right. So it looks like the average price of a home is actually same as Santa Clara right now, 1.5 million.
Right.
Okay, so almost the same. So let's compare. So this is where things get interesting. So 2005, that area was actually more expensive than Santa Clara. It was almost 700K, and now as of today, it's sitting at 1.5 million. And if I take a look at uh, income in that area, okay, wow. This is what's amazing. I think Santa Clara, we just saw the median household income is 150K, but this San Diego area, actually median household income is 185K. A little bit. Sometimes numbers can be surprising. So people make more money in that area. What's going on in that area? Have you studied that area? I mean, that's a very interesting zip code.
Yeah, it's quite crowded and not a lot of land space available, open land space available. So,
Yeah,
and most
well,
of them are houses, not too many like apartments.
I have a feeling that a lot of people moved in that area during the COVID crisis. And I say that because I'm looking at the income growth, and most of the income growth actually happened after 2020. Like around 2020, the income growth was 137.
Oh,
So
wow.
which is interesting because if I look at 2007, income was 132. And all the
Mhm.
way to 2020, income growth was only 137. So not
Mhm.
much income growth in those, 10, 15 years. And then since the COVID hit, income growth went from 137 to 185. So there could be a risk here that some of these people might actually move back and thus income might drop. So be careful with that because it's like a big spike in just a couple of years. So
Mhm.
you might want to check on that. And let's take a look at home ownership because that can tell me about that data here. Yeah. So for example, back in 2011, home ownership was about 85%. So more people own homes in this area than in Santa Clara. And in 2020, that number had dropped to 78%, and now it increased to 81%. So still, I like the area. Whenever you have more people who owns home in a particular zip code, chances of that market prices to drop is less likely because they're homeowners, they're not investors. So we're talking about only 20% are investors here. So why would they actually sell? These people live there. So again, I like the zip code. I'm glad you brought that up. And as far as you bought it for investment or you live there?
I live there.
Okay. So let's see the rental rate. In 2005, that was about 2,000 and now it's 4,000. So that's been consistent everywhere in last 20 years. Seems like rental rates has doubled
Just doubled.
everywhere. Look, the main reason I like the area is because of 80% people are homeowners there. So it seems like a very, very, very stable market. What I don't like about the area is that for $1.5 million, I'm only able to generate $4,000 in rental income.
Right. There's a problem. Yeah, that's what I wanted to understand.
Right.
Yeah.
So that's why it's not really good for investors.
Mhm.
But for people who wants to live there, that's a pretty good opportunity. Rajesh, no problem. I'll see you next time. All right, guys, should we wrap it up or anybody have any other questions or you want me to look into anything else?
Oh, that's great.
Yeah. Thank you.
Yeah,
Thank you,
sorry, I
Yes, sir.
missed the zip code that you were just looking at. What was that?
It's 92131, San Diego.
Oh, okay. Thanks.
Yeah. So once again, very good for home ownership because of high home ownership rate there. But again, it's only producing $4,000 income for $1.5 million investment. So, I mean, you literally need to get the interest rates back down to like 1% to make sense out of these numbers.
Not getting it in my life.
Yeah. So, Deepak ji, so I was thinking of moving from Northern California to Southern California
Okay.
because I would be able to get for the same price a big lot and a house.
Can you give me a zip code or an area? Because like,
Oh, I think Irvine or below LA. I don't have any particular preference, so it could be San Diego, anything below LA.
okay. So let's say Irvine, for example. In matter of fact, I can even look at this way. I'm looking at this whole area, and looks like that Irvine area, the rental rate is about the same, 4,000. Seems like that seems to be consistent everywhere. Laguna Woods is a little bit less. 92603, that's a high rental rate, almost 5,000 there. 92603. And let's say the home price is there. But again, you're thinking about moving it for yourself, right?
Yes, I want to live there. I mean,
Yeah.
not to invest or something.
Irvine
Because
also
for
has
the same money, I
Melrose.
get a bigger land.
Yeah. So for example, 92603 is a good area, but the median house price is 2 million instead of 1.5 million like the San Diego. But you make extra 1,000 on that $500,000 there.
But you also have Melrose there, taxes, those 58 taxes.
Yeah, probably. I mean, I'm just looking at it from a rental rate point of view. But anyhow, what's your question, sir?
Oh no, that not really a question. I just made a comment. That's all. Thank you.
Yeah, but if you look at the areas, right? I can tell you, for example, you might want to take a look at 92656 area, right? I think you can get an average house for about $1 million still there. 92688, another area where you can get the house for about $1 million. Let's see what else. 92630, Lake Forest. Average house is about $1.1 million there. So that could be another good area there. This is an interesting one. This is actually very close to Newport Beach. So Newport Beach, yeah, I might even look into this. You might want to check this out. So Newport Beach, the average house is 2.4 million, almost 2.5 million. And right next to Newport Beach, there is Santa Ana Heights, 92627. The average price there is 1.2 million. So you're very close to coast, and the prices are really lower. You go further down to Costa Mesa, it goes to 1.3 million, and if you go, more further down, then it gets to almost $800,000 average house in Santa Ana.
Okay.
So that's how the pricing looks like. Which is, I'm curious to see. let me see. What I'm going to do is also going to look at the rental areas in that area since we are talking about that. Okay, rental rates. Not bad, actually. You know, if I look at some of these areas, the rental rates are any bit between $3,000 to $4,000 for $1 million investment. Way better than some of the other areas. So those could be this area right next to Santa Ana. There might be some opportunities there. So if somebody's looking for a rental rate, yes,
So
sir.
Deepak ji, can you check zip code 93619? Here, some of my friends bought. They are getting good rental income with their
Clovis.
investment.
Yeah,
Yes.
Clovis. Let's take a look at Clovis. Where are you, Clovis? Gotta bring you up on the map. 1 second. Where are you? Okay, right here. Okay. So 93619. Okay. So yeah, right now the rental rate is almost $3,500 in that market. How much are they renting for? Do you know?
Yeah, around 3,500, and they invest their properties are only 500-600K.
Yeah. So let me tell you. But I think mostly probably older homes, right? So it looks like yeah, you're right. The average house is about 600K in Fresno County. So yeah, I mean, for 600K, you're getting 3,500. Not bad for investment point of view. The question, you know what? The one thing I do want to check though, because Fresno, you want to take a look at the poverty there and population there. So let's see. So population growth has been huge. It's almost 53, and poverty in that area actually has dropped down. It's been consistent, not that bad. Actually, I like it because the poverty level is only less than 5%. So for 500K, yeah, you can make the math work there.
Okay.
Yeah.
What is the zip code again for the Fresno area?
93619.
Yes, 93619.
Yeah. If you were to ask me, is the properties overvalued? Probably, maybe 10, 20%, but not like other places. So it used to be a lot higher back in 2022. So the prices has come down quite a bit. Uh, you know, if you wanted to bring the prices down back to, let's say, pre-COVID, they need to come down another 20%. So I would say if you can get a median size home for 500K, it's a pretty safe bet.
Okay.
Not that bad actually, considering you're able to collect $3,500.
Okay. All right. Thank you. Thank you so much.
Yeah.
And
Let me tell you one more fact there. How's the home ownership? Because the problem I have with these kind of markets is sometime when you have a large investors there, then when market drops, they just sell like crazy. So let's see how many. So only 17,000 homes altogether in the area. How's the vacancy? Oh, wow. Man, you're going to love this. So back in 2012, vacancy rate in Fresno used to be about 8-9%. It has dropped to about 3 to 4% in last few years. So in last 3 years, 21, 22, 23, 21 used to be 4.28%, 22 was 3.49%, 23 was 3.91%. So wonderful, actually very good. And let's see how hard it is to sell the home in the area. Again, not bad. You were able to sell the home in roughly about 40 days. So and that's been pretty much the average really over the last several years. So good. I think that
yeah,
somebody looking in real estate, this could be a good opportunity.
All right.
uh,
Thank you. Thank you so much.
can you
What
please
was
help in
each
checking
case?
one more zip code?
Yeah, sorry, go ahead.
92563.
92563, 92563. Alrighty. Okay, 92562, 9.56. Okay, so Vacancy rate in that area is also pretty low, 4.2%. Housing units are about 24,000. About 1,000 of them are sitting on the market as of right now. And again, this is another good area because back in 2011, the vacancy rate used to be almost 10%. It has come down to 4%. Looks like a lot of people moved in into that area. Let's take a look at the rental rates. Wow. So this is a little bit problematic because in 2019, average rental rate was 2,200. And it has grown from 2,200 to 3,600 just in last 4 years. So big jump in rental prices. So a lot of people are moving there. And what happened to the home prices? Let's see. And actually, home prices are not bad. So in 2020, the home prices was roughly about 500K, and now they are on average about 700. So have you looked into a property there?
Yeah, I'm considering over there and looked few properties,
What
but just
price?
wanted to know, yeah, like same range, 600, 700K,
Okay.
like within 800K. Just wanted to know, like, what is occupancy, rental or like, I mean, like, percentage of investors versus the homeowners.
Okay. So let's take a look
Are there
at,
a lot of investors over there?
yeah, so I can pull that up for you. So 75% of the properties are homeowners. So not bad. Only 25% are investors. So
Okay, thank you.
so that's pretty good. The poverty levels, I think I already told you, has been dropped to 4. But it looks like generally speaking, California just got so rich now. Not as many much poverty anymore. And rental rates are pretty good, about 3,500 again. But I think what was in Fresno? What number did I say in Fresno? Because Fresno prices are cheap, almost 500K, and I think rental was almost 3,500.
Yeah, you did not check. You did not check the in how many are householding or homeowners versus investors in 93619.
Okay, so we can take a look at that. But let me just 92563 right now, rental rate is 3,500. And vacancy rate, I already said, was pretty low. Home ownership is pretty high. Days on market, let's see, how are they been doing on days on market? On again, same thing, 44, not bad. So you're able to sell the home fairly quickly. And are people dropping prices? Yeah, some people are like, looks like half the properties are dropping prices. So not bad. So overall, again, another good area. Um, not bad, you know. Okay, so you want me to go back to 93619?
Yeah. Just check how many investors versus homeowners.
Okay, 93619.
And Deepak ji, where are you checking all these facts?
There's a lot of different data comes from. The one I use is Reventure. That's where I get the data from. In matter of fact, I can share it with you guys.
Yeah, that would be good.
Yeah, I thought I already have a screen share on, but you able to see it?
Yep.
Okay, so we were checking home ownership, right? Okay, so wow, pretty good, 87.3%.
Okay.
All right, guys. Anything else, or should we call it a day now?
Sir, can you help with the zip code 95630?
95630?
That's correct, sir.
Folsom. Okay, so again, looks like you guys are all in the same area. So 70% home ownership rate. So still, again, not bad, but 80% plus is really, really good. And let's pull up the population in that area. Let's start with that. So again, looks like there was a dip during COVID time. People are starting to move back in that area. And home ownership is 70%. Used to be a little bit higher. So it looks like more investors are starting to move into that area for sure. And what's the price looks like? So a little bit higher out of the last couple ones. 767 is the average home price there. Again, this is close to, I think, Lake Tahoe, right? And
I think Intel is there too.
yeah. So if it comes down, it might come down to like 650 or something. So you're You're not that far off. It's not like a huge risk, basically. That's what I'm saying. It's not that bad. And rental or moving, what are you thinking? Are you going to move there or are you going to rent the property?
It's for the investment.
Okay. So rental is about 3,000. Same thing looks like this is all like COVID kind of. So guys, be careful with these markets, right? If people start asking people to come back to work, you might see these rental rates to drop because I don't like when there's a big steep rental rate increases. That means they just don't have enough properties and a lot of people moved into that area. And if work from home ends or people ask to come back, then this rental might kind of come down, right? It's way too steep. From 20, like just in 4 years, it went from 2,100 to 3,000. So there's a little bit of risk with that. Um, Vacancy rate, let's see, is very, very low. So again, good for rental, 3% vacancy rate there. And anything else you guys me to check on this one?
Maybe one last thing. What's your take on investment in Tracy area?
Tracy, let's see. See again, overall, guys, over the long term, real estate is usually very good. Okay, so once again, vacancy rate is only 3.7%. I think see all these areas that are further away from the main action simply means that because of work from home, people moved into those areas. So biggest risk you're taking here is that if people need to come back, they will start the rental rate will drop. That's the biggest risk. So if I were like, let's say if I wanted to buy a property in this area, for example, I would probably not base my numbers based on this number. I'll probably base my number on this number right here. Either 2019 number or 2022 number. So I'll say, look, maybe my average rental rate is going to be 2,500, not 2,900. That's the way I would probably look at the market. So vacancy is very, very low. And what do I get for 2,500 bucks? For 2,500 bucks, I need to spend $600,000. That's what I'm getting. So I think there were a couple other areas that are producing better than that for 600 bucks. So maybe not. And let's see how much risk are we talking about? So 550 to 620. So again, and this fair market number, by the way, they're coming up based on the income people are producing. So again, this is not fair because a lot of people might have bought a house in that area and moved there. But if they are asked to come back to job full time, like all 5 days, they might want to sell out and move back in. So this number can fluctuate. So I think all of these zip codes that you guys are mentioning, all related with that trend. So be careful with that part. So I would probably settle somewhere in between, like your risk reward ratio there.
Cool. Thank you so much.
Is this is it a tool or is it some website that can be used directly, or is it some paid subscription?
It is a paid. So I subscribe to a lot of paid subscriptions just to answer questions for people instead of just when you ask me what's my opinion, what do I know, right? I got to look at the data and be able to tell you. So I subscribe to all kind of tools to just give a little bit more accurate information. But yeah, this is open to anyone. You can always buy it if you want to buy it.
Can you please share the link?
It's just called Reventure app. They might just maybe if you just search Reventure, you'll probably find it. I think this is their app link, but it might not be. Oh, it looks like it did. Yeah, maybe it might be reventure.com or something like that. All right, guys. So if anybody have any other question, otherwise we call it a day. But I think we found some good locations though. Rancho Cordova 95742. We can look at that. 95742. Yeah, and you guys don't have to buy it, by the way. If you on a discussion calls, I can always pull up these numbers and give it to you because it's not worth buying for just checking out one or two properties. I think it's like maybe $400 or $500 or something like that. So 95742. Okay.
Rancho Cordova is close to Folsom only. So how is that looking, sir?
Yeah, so so again, this is I like it is because the price is not that steep. It used to be around COVID time, it was 500K, and now it's 650. So it didn't really get as much appreciation. The average home is 650. And then it's this, if you're thinking about this area, then also pay attention to, like, you don't expect too much appreciation in this area. This is really more of a income generation play. Looks like it doesn't, the values don't grow that significantly here. If I take a look at the average income, the house should be around 600K. You're getting 650, so your risk is very low in this market, so pretty good. And if I take a look at the rental rate in this area, is about 3,000. So, you know, and looks like in COVID, it went up to almost 3,400. So rental rate is coming down and starting to go a little bit up, on average 3,000. By the way, you're thinking about rental or personal?
Rental, sir.
Rental, okay. So what was the
investment?
So I think 600K producing $3,000 in income for you. And if I take a look at population in that area, consistently growing, so that looks good. And home ownership rate in that area is roughly 80, well, very good, almost 90%, 87.3. So again, I don't think you're going to see a lot of appreciation in here. $600,000, you're making $3,000 a month, so $36,000 income. I guess still better than buying 1.5 million and making 4,000.
Between Folsom and Rancho Cordova, which one looks more attractive, sir?
So for that, we got to create our Excel sheet. So let's do that real quick if you want to compare those two areas. So we can put the numbers down here. So we'll see. Let's see.
95630 was 95742.
Okay. So this is 95742. Home ownership is at 88% roughly. Home prices, I think, was 600K. 645. And rental, I think, is $3,000 a month. And let's see. And what I want to see is, by the way, let's see the age in that area. So still not bad. Okay. So rental rate was 3,100 actually. Okay. And how's the poverty? It's 3.6%. Okay. All right. And what was the other zip code we were looking at?
95630 was 95742, which is Cordova.
Yeah. So let's take a look at 95630. Where are you? Okay, right here. So poverty is much more higher in this 95630. So be careful. And rental rate is probably lower as well as expected, 2,900. And the home price is 767. And home ownership. And actually, let me see over value. How does the income compare to the risk? 15%. Okay, 15% risk. Okay. And home ownership is about 69%. Okay, so based on this data, I think 95742 makes more sense because home ownership in 95742 is higher, almost 88%. Home prices are lower, 645K. Rental income is higher, 3,100, and poverty level is 3.6 versus 95630. homeownership decreased to 69%, rental decreased to 2,900, home price increased to 767, and poverty increased to 5.1. So clearly 95742 seems to be numbers wise makes more sense.
Okay, sir.
All right, guys, I think we should call it a day unless anybody else.
Yeah, Deepak ji had one quick question.
Okay.
So regarding the Airbnb, I was trying to look on your website and you have certain videos on that as well. So if you do short-term rentals, I don't think the property that you buy for short-term rental could be tax exempt, right? I mean, a tax write-off. It's only the expenses and all of those that is something that we can write off, right? If I do short-term rental.
Okay, so help me understand. When you say tax exempt, meaning what? What are you thinking?
Like a write-off, right? Let's say
Of
if I
course you
buy
can.
something for
Yeah, so everything can be a write-off. So first of all, if it's a short-term rental, that means you're renting the property for 14 days or less on average. That means you can consider it as actively managed, providing you are spending most time on that property more than anybody else on that property. That means you can, first of all, do what we call accelerated depreciation on the property for 2024. That is 60%. 2025, that will be 40%. But if Trump decides to make it 100%, he might be. So I think it's a great strategy, especially if you're on high W-2 income, because you might be able to take good, most properties are at least 500, 600K. So you might be able to take 150, 200K off your income and make it completely tax free, especially if you're in higher tax bracket, because that can reduce you to lower tax bracket. So it might work out in your favor. Absolutely.
So you are saying 60% of the property price can be against the W2 income I can write off, is it?
No, no. So the way it works is, so let's say you buy a property. I'll make a simple math. Let's say you buy a property for $1 million. So what you're going to do is depreciation calculation on that property, and they're going to find out what kind of items in your property can be depreciated in 5 years or less. And usually that number is 30% of your overall property value. That means out of $1 million, maybe 200,000 might be land value. Let's just say 800 is property value, and 30% of that 800, so let's say $240,000 would be the property value that you can depreciate. Now you take 60% of that 240K as a write-off against your W-2 income for 2024, and then rest of it you take it over time.
Got it. Yeah,
And
that's
then
very helpful.
yeah, no, it still works out very well because you're saving those taxes and you can reinvest in something else that you like.
Oh, okay. Yeah, would you mind sharing somebody who can do the cost segregation again if you know someone?
Yeah, so
that
there are
has
multiple ways. There are multiple ways to do that. First of all, before you even do it, anytime you want to do something like this, is always do consultation first. That's the first advice always.
Okay.
Because and I'll tell you why, because what will happen is if you skip that step and decide to go the other way, the more you're invested into that process, more you're going to think that's the only way to save taxes. And that may or may not necessarily be the right step, right? Because the more time and energy, especially money we have invested in something, the more we get stuck with that option. So first thing is that even the right thing to do? You got to figure that out, right? And then you move on. To do cost segregation, you have three options. One option is you can just come up with some guesses. Number two option is there are softwares online that you can just buy, maybe $500,000, and they can do that for you. Or three, you can work with professionals and they can give you an actual report that you can rely on. So I think that's the best to become audit protected. That means if IRS comes back and say, hey, how did you come up with a number? You have an actual auditor who has certified that this is the right number. But again, my advice would be before you even go there, let's do a consultation first and figure out if that's the best thing to do or not.
And Deepak ji, you are based out in Bay Area or where are you based out of?
I'm in Austin.
You're in Austin. Okay.
Yes. All
Thank
right,
you.
guys. No problem. Anytime, sir.
Sir, one general question.
Uh-huh.
If we are planning to buy a rental properties and rent it out, is it always better to handle it through LLC, or it is okay to have it in the personal name and handle
Yeah.
it?
So really, so there are two parts to the question here. So one part is related to taxes, and that does play. By the way, where is the property located? Just curious.
Say if it is located in Folsom.
Okay, so California, right?
Yeah.
So in California, there are three parts you have to look at when you're making that decision. And once again, not a quick answer. It's another good one where we should do consultation. The three parts you need to look at. Number one part is taxes, not just the taxes today, but in future. Second part is estate planning. And third part is liability protection. So each one of them, we need to look at it separately. For example, in order to figure out the liability protection, we need to look at how much equity in the properties, what other properties you own, what kind of risk that property presents you, who manages that property, what other properties you might have. So all of those things needs to be looked into it. The second thing is estate planning. What do you want to do? Are you going to eventually sell it? Your kid's going to inherit it? How should we look at that? And then third part is obviously taxes. So when you look at the overall picture, then you come up with an answer. So one of the bigger problem we see in real estate is a lot of people do one way or the other. They would never do LLC or they will always do LLC. And both are the wrong way to look at things. You want to analyze the whole picture and then come up with an answer. So I wish I can just tell you yes or no, but if I give you that answer, most likely it will be wrong without understanding the overall picture.
Yeah, I've seen people owning just one home also goes with LLC. So that's why I was asking.
No, you're right. And like I said, oftentimes it might be just calling for trouble. They're spending way too much time and energy dealing with LLC than it's worth it. And sometimes it makes perfect sense. So no, not a quick answer.
Got it.
What if the plan, sorry, what if the plan is like having like multiple properties maybe next 1 year or 2 years, but as of today, I don't have, suppose, any property and I want to start with LLC and start from like first property itself in LLC.
Okay.
Is that advisable or?
Yeah. So if you have already decided that you're going to treat it like a business and it's going to grow like a business, then obviously we know liability is going to be there. So in that case, it does make sense to start with an LLC to begin with.
Okay.
Yeah, because you
And
already
how
know where you're
easy?
going with it.
Right. But it is always easy to move the properties from personal to LLC, right?
Not
There is
really.
no.
Not really. So that itself is often misunderstood. There are city taxes, there are state taxes, the county taxes. There could be other tax-related ramifications, and 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 then obviously there could always be an issue where your property may get reassessed for property taxes purposes. So it does need to be done in a certain way to avoid all those kind of problems. So becomes an unnecessary headache. All kind of cost gets involved. So sometimes it makes sense, sometimes it doesn't.
Okay. So is it advised to like move my own house also where my primary residence into the LLC
No,
or no?
no reason for you to do that.
Okay.
Yeah.
And which state is like good to like open LLC? Is it, or should it be always in the same state? I have the properties because I might be having properties in multiple states, right? Say in Texas or California.
Yeah. So again, by default, you're going to set up an LLC in the state where the property is located. So that you're going to do no matter what. The question is, do we add another entity on top of that? And sometimes that might be necessary because you have enough assets that needs to be protected, or you have enough income that needs to be protected. Mostly, I like to use the second strategy if your real estate is producing significant income. Then it becomes more important to have a second entity to protect that income.
So are we saying like we can have multiple LLCs, like one for each state or?
Well, again, depends upon what are we trying to accomplish. If there is enough, for example, let's say if I have three properties and all three are, in an LLC, and I'm buying one property because it doesn't have any kind of um, equity in it, and I don't expect it to appreciate that much, then maybe I don't need an LLC. But if I expect it to be that property is going to appreciate, and I need to protect my other assets, then maybe I will put it in LLC. Like I said, this LLC question, I see it both ways. Sometimes I see people, they just put everything in LLC. Sometimes they don't put in LLC. And when you're doing all this, you're spending a lot of money. And here's another part. People put in LLC and that LLC is not even providing them protection because they have not set up the LLC properly. All they did was register it with the state, and that's about it. And registering with state means from an IRS point of view, that's good. But you didn't create the LLC for IRS point of view. You created the LLC from asset protection point of view. So if you don't have a proper operating agreement, you're not keeping track of your minutes, you have not structured that LLC for a real estate purpose, then that LLC is probably most likely not providing the protection to begin with. So please, if you're thinking to do with the real estate transaction, it makes perfect sense to do at least one consultation, understand it one time, how the whole process works, and then you can manage those affairs going forward.
Okay, got it. Thank
Sir, one last question. Do we need a business license to rent a property in California?
Unless you are doing short-term rental. For long-term rental, you don't, but short-term rental, most likely you would.
Because a lot of my friends who had rented the home here had been mentioning that a business license is a must. So that's why I was confused.
Maybe they're putting on Airbnb?
No, it is not an Airbnb.
Then I don't see why would they do business license, because you're not really doing, they don't really, because by default, real estate is considered passive activity. You make it active, which requires business license by by basically doing short-term rental, or maybe you're doing some business out of that property. But again, this could be maybe a requirement from a city. Maybe the city is requiring it. Maybe that's why they got the license.
Yeah, it's kind of confusing. Some people are saying it is must, and some people are saying it's
No,
not.
okay, so don't go by what people are saying. Go by what your city is saying.
Okay.
Because
okay.
it's regulated by city. You're not talking about some sort of state license, right? You're talking about a city license.
It is.
Right?
Yeah, business license. Yeah.
Yeah. So the business license means city license. So the best answer you're going to get is from a city you're in. So city could have a reason because maybe they want to track how many are owner occupied properties and how many are investment properties. Maybe that's the reason. And cities change regulations all the time. So if you're putting it on rent, check with the city. Always a good idea.
Okay.
Yeah, don't go by people. Maybe their city requires it and maybe your city don't.
Got it, sir.
Yeah.
But getting a business license, does it reduce the tax or any tax benefit?
No, not really. In matter of fact, it will increase the tax cost because that business license most likely will come with some sort of cost. Sometimes the cost might be just a registration fees, and sometimes they might charge you a percentage of your overall profits or income. So, and cities kind of manage that stuff.
Got it, sir. Thank you.
All right, guys. So let's call it a day.
Deepak, one question on taxes. So is there huge taxes, let's say capital gains tax in January? I sell shares and there's a huge capital gain on long term. So would that kick in AMT, or do you have to pay tax upfront in 2025 when I sell the shares, or I have to pay in 2026?
Yeah. So normally, AMT, again, we have to do calculations. So I can't answer that question. Just generally speaking, we have any idea what kind of taxes are we talking about? 100K?
Long-term capital gains.
Yeah, but how much?
Yeah, I mean, you can assume over 200K.
If it's going to be over 200K, then do a consultation before. So when are you planning on selling? January, February?
January, yeah.
January, right? So, and that's the taxes or that's the sale?
That's the long-term capital gains.
Gains, not the taxes. The taxes will be maybe 25-30%, right?
Yeah.
Right. So that doesn't really bother me too much. Normally, capital gain taxes you can wait to pay for taxes later on. They don't really bother you too much. But if you want to be on the safe side, you can always make estimated tax payments based on what you did. But we can. Would there be like also significant W-2 income as well?
Yeah, W2 income is there.
Because if there's like, let me ask you this. In 2023, did you pay more than 100K in taxes?
2023, no.
Okay. Then more than likely you're not in such a high tax bracket. So again, it's very hard to know these things without looking at the number. But whenever I have somebody who has high taxes, that's when I get a little bit worried. People who have low taxes, they're usually generally okay. But might not be, because you're going to be going to do your tax returns anytime soon anyway, right? In a couple of months. So maybe at that time, have them run quick numbers for you for your 2025. Because you can estimate what your income will look like, what your other taxes would look like, and at least come up with a ballpark figure.
Okay.
All right, guys. So let's call it a day, and we'll connect back in January.
Thank you, sir.
All right.
Thanks for all the information.
All right, guys. Thank you so much for spending your morning with me. I'll see you guys in maybe hopefully in a couple of weeks. Okay.
Thank you, Deepak ji. Thank you so much.
Bye bye.